So, this is the major support line that I was really concerned with Wish breaking. I should probably wait till someone gets in here. Yo. So this is technically where we don't want to break is 51.9. The reasoning for that is that's essentially going to... So we just broke this support, right? The day before, we had another big support, which was right here. That's the 51.93 mark. If we break that, we should immediately see downside to 49, which we don't want, obviously, since we're long on calls. But here's the good news. This is after hours trading, so I honestly expect this to go bullish from here. A lot of times we've been talking about how squeezes operate. They tend to break opposite of the way they want to go. So it's kind of like either a big bull trap or a big bear trap right before it either tanks or rockets. So I'm still feeling good on Wish. I won't feel good if we break below this 51.9 mark. But that being said, the first 20-30 minutes of trading, you should not make any rash decisions unless you gap way down, right? If you gap way down, sell it at open. But if you're down a little bit from the day before and you're holding on to a major support, if you break the support for a second, don't rush and sell to close it. Make sure it's confirmed. Let's check our boy AMC today. AMC is going to do some fun stuff today. This is a very dangerous spot, and then this range is essentially where every bear and their mom is going to come out in short. Plus, all the momentum traders like myself, well, if this wasn't AMC, I would be selling here. Why? Because it's just a very easy play to take profit here, and it's a very hard play to break through this, right, without testing back down. So essentially, this is my AMC chart since our breakout, and you can see that I have a bullish trend and a bearish trend, actually quite a few of both, and then some supports and resistances. So every time that the resistances and the bearish trend pass each other, that becomes like a big bearish opportunity. So they're going to short here, right? Stock will go down. Same thing on the bullish side, though, right? So we hit this support line, right? And it also hits this trend line. Both of these are major bullish buying indicators. So some traders will trade with trend lines, some will trade with fib levels, some will trade with supports and resistances, patterns. But essentially, the more times that different technical analysis can line up, the more buying or selling pressure you'll get. So all of these different bearish theses came together right here, and you get this big sell pressure. All the bullish theses come together right down here, right? So you get this major support plus this major trend line, and you see this fantastic bullish push. So with AMC, my concern is that there's too much money to be made on both sides. So I think that we kind of have to break down before we could break through 70. I hope I'm wrong. So yeah, so we hit 59.47 on AMC at after hours trading, and it rejected that in after hours. So the first few minutes of trading here, we'll test it again, and that'll kind of give us an indication of how the morning will go, or at least the next 30 minutes. So as soon as the market opens, I turn off my extended hours trading. I don't want to see it. I want to see these gaps. When you have your extended hour trading on, you don't see this gap. So now I'm sitting here on AMC, right? Sweet. So space 51.8. So we just broke that support I was talking about. But this is the bearish trading thesis, right? So we broke through the bullish, right, up through the bullish, and then way down through the bearish trading thesis. So now all of these bears are going to take profit here. And at the same time, this creates a nice buying opportunity because we're sitting at this support. So what I actually anticipate seeing today is a red to green move on space. And AMC is kind of opposite. I anticipate we touch up here and then we come back. It's a beautiful blackberry chart. GTT's holding good. So my stop is 2.27, which is pretty huge, but this is, you guys got to remember, this is a play that I'm planning on swinging from 3 to 15 range. So for me to lose this, percent here isn't really a big deal in the scheme of things. So my stop will be 2.27 just because I think if we touch that, we'll break into 1, and then I'll just re-enter in the 1s. What else we got? Express is green today. This will go red. This will definitely go red. This is a shorting opportunity. So what I'm going to do is I'm going to create an alert right here. And when it crosses it, I'm going to short. So I have an alert. If this pops up to here, I'll buy a put. We're a Lambo. This is a buying opportunity. This isn't a selling opportunity. Go long on a call here. Let's take a look at the products for space. I'm actually going to go out to the 9th on this one. And I like the 0.3 deltas, so let's go with the $65 call on the 9th at 2.1. Let's copy this. We're going to put it into a watch list over here so we can track it. So I put it down here. And now when I'm going back to my trading chart, I'm going to pull up another tab which will show that option. So, let me link this to the, sorry. Let's try this one more time. So I pull up the space thing that I want to trade, which is the $7.965 call. And what you're going to see is yesterday it was at 5 at its highs, and today it opened at 2.2. You don't want to catch the falling knife, but you do want to buy it when IV's low. So if we're expecting a red to green move on space, let me pull up the chart. What we're going to do is enter incrementally because you're trying to catch while the momentum's down, but you don't want to catch the falling knife. So enter small at first, and then incrementally enter if it goes the way you want it to. I already missed it. Sorry, I was trying to do too much, but that was the trade. Right here, you could actually enter, and we should see some upside right back to where we were. Axel, Excel. Yeah, what's up, man? I've been managing my portfolio for 10 years or so, uh, and I've been actively trading for 3. So yeah, so that's the move, and that was the entry, but I missed it because I was doing too much trying to talk to you guys. But yeah, that's what you're looking for when Ivy dips like this. So you check the call pricing from the day before, check the lows, check the volumes, make sure you're at a support that you think you'll hold. And as soon as that all comes into play, right, that's when you go long on a call. And then this is more of a swinging call because this is 2 weeks till expiration. And yesterday I bought scalping calls because the IV was so high. BlackBerry just crossed my alert, so this is an entry zone for BlackBerry. So what we're going to do is we're going to pull up the BlackBerry calls that we want to enter into. This is going to be the 917 call. Nope, no it's not. It's going to be the 820 call, 15. So it's down to 1 right now, and that is a good entry for me. I'm going to pick up a few more of these. Alright, put that on my Twitter. All right, so that was 2 trades that I could have taken. I only took one. The space trade, it happened so quickly, and I was going over the information, so I actually missed this entry. But hopefully, you guys got the logic behind it. So essentially, what I'm looking for is how would I describe it? An anomaly. So this is a bullish stock, but we're in a bearish day, right? A bearish open, rather. So that's an anomaly. Why? Because it's not bearish. It's bullish as fuck, right? So when that happens, that's when you want to enter into a call. Same thing for a put. When it's a bearish stock, like Express, but it's in a bullish day, right? What you want to do is as soon as it hits up, right? So if it went bullish today, because I'm bearish on Express, I would buy a put. So you actually trade opposite of what you think you should trade if you want to be successful trading options. When you buy calls when IV's high, you're playing into what the market makers want you to do. When you buy an AMC call today, right, you're going to lose money. Why? Let me show you the products, the option chain. So do you see how all of these are just absurdly up? Actually, they're not. That's the point, right? So do you see how all of these are only 12% up, but AMC's up 3% from yesterday? Well, that's because the IV on AMC, the option pricing is based on the probability of where it could go. IV essentially is, volatility means the likelihood to move specifically upwards or downwards. So implied volatility is the likelihood of this stock to go way up or way down, right? So when AMC made a move from 13 to 70, the implied volatility skyrocketed, and it still hasn't come back down to an appropriate range. Now, something like BlackBerry, when you look at this, right, we came from 21, and we've been in a downtrend for 2 months of, or a month and a half of trading. So the implied volatility on BlackBerry is very low. So this is where you'd enter into like a swing play. And let me turn off again. When you're trading options, you don't want to see after hour trading. So obviously when you're in the morning, you're going to turn it on to look at what's going on. But as soon as the day starts, you turn it off. This will show you gaps and stuff. So this was my entry zone, which is not looking very good. Something's going on with my charts over here. Okay, that's better. So this was, what the fuck? There we go. Great. I'm gonna go to a different charting thing because something's wrong with my settings here. I'm not sure what. So I have a few different tabs I chart off of. One of them's just charts, one of them's trade, and then you can go to active trader and it'll pull up a new chart. But I'll show you what I mean where I didn't like that. So you see how you can see this one a little better. It's not disproportionately spaced. It's fitting studies, I think. But yeah, so get BlackBerry gaps down, and I'm bullish on it, right? So this is another anomaly. So it's a bullish stock, right? I think that we're breaking out of a major downtrend, so I want to enter into a swing trade. And it's in a bearish day, like a bearish moment in this time. So that's your logic behind going long in a call. It's you're finding a mismatch. Hey, the big picture is bullish, but there's a bearish moment, right? Hey, go long on a call. If it's bullish and bullish, right? If it's big picture bullish, short picture bullish, you don't want to go long on calls. You want to sell calls. Otherwise, you won't actually make money off of the risk. Won't make good money. But yeah, that's a good BlackBerry entry. And then you can take a look at the actual chart. So I entered at 1. And right now it's trading at 1.01. It hasn't started moving in the way I wanted to, just because it's so far out. But what you'll see is as we start to hold this level, the IV will start to rise again. So as it dropped, the IV went down. And then as it's consolidating in the middle here, the IV will start to go up. And if it comes back up to here, it'll rise right to where it was. So these will be trading at 1.15. And now this is, yeah. Let's take a look at space. Sorry, I gotta get back to my other stuff. So yeah, so this is the green to red move that I was, or red to green move I was anticipating. And this will actually create a much larger push up than if we had just stayed bullish. So obviously my entry wasn't perfect. I made a lot of money on space yesterday, but I held a few of my positions. And those ones are all down today. So obviously I would have liked to have sold them all yesterday, but I can't anticipate that. But what I can do is I can say, hey, this is still a very bullish stock. It's in a bullish pattern. And if anything, I'm just going to go increase my position size. Holy shit, guys. Those plug calls that I bought. Holy shit, boys. That's a fucking 300%er. 200%er. Yo, where's my people at? Who is watching this shit? You guys seeing this? I'm fucking crushing it. That's up over 200%. I entered at 0.25. Woof. Woo! Yeah, man. Sometimes you get them. That's the importance of leaving runners. So I can't even stress this enough. Sell your losers and leave some fucking runners. Like, it's that simple. Everyone has this backwards strategy in mind where they want to sell their winners and buy their losers, right? So they want to average down on their losing positions and sell their winning positions to do so. Don't do that. That's bad. Don't do that. Average up. But yeah, that's a nice little plug trade there. I did not expect those to print. I was doing it on a volatility play, so we gapped way too far down. It was oversold on Monday, so my entry was here. Um, Brett entered with me. I think a couple other people traded it with me, and then Monday morning they gapped up to 100%. Or I'm sorry, they gapped up to 40% and hit 100% on Monday, and then today they're at 300%. So that's pretty good. You can't complain about that. Oh, you want to see some charts? Hey guys, I'm always happy to pull up whatever charts you'd like. I'll do my technicals on it. I'll pull up cleaner now. No idea what it is, but pull it up. Oh yeah, that's the fuel cell. It's similar to fuel cell, right? So don't enter, or if you did enter, sell at 11, and then we'll do a little retracement of the fib level. So what you're doing for a retracement is you're going backwards, so high to low, right? And that'll give you a retracement. So you don't want to do this if you broke this low, but this will give me. So as you can see, this is a solid buying zone, and it kind of created both supports and resistances. Uh, this is a major resistance zone, 61 to 78. And then obviously because we topped here before, it's going to have sell pressure here. So what you want to do is anticipate that it'll bounce off of this, right? And then set an alert, right? So what you're going to do is it's a few steps. So create your alert on the spot it's going to bounce. So first thing that I would do is create an alert with my fib retracement. If it crosses above it, I want to know. Now, the next thing I'm going to do is when that crosses above it, I'm going to sit and wait, and I'm going to track how far down it dips. Okay, I'm not going to enter. Great. So now it dips down to here, and we touched it again, right? Now, if we break, so this is where I guess my trading rules come into play. So I had set up a structure in which to trade. So you can see we touched this, and now I'm waiting for my down, right? And that'll give me an indication of where I want to enter over here. So as it's coming down, this is where FOMO traders get caught. So they see the first red dip and they buy it. But the problem is all these people just bought up here, right? And they're going to sell. So it actually doesn't generally usually work out. So you wait until the second down dip. So we have major up, we have no downs yet. We want one down, a halfway back up, and then another down. It would look something like this, and it would be labeled as A, B, and C. So A So A equals the high to low on the first down push. So you wait to find out A. You can't calculate that. You just wait to see what it is. So then when you find out what A is, you would draw a line with it. So this. And then B. Come on. Okay. So B equals, and this is general, so we'll do a little one of those math things. 0.6. So B would be, generally speaking, a 61.8 to 78.3 retracement of A. So as we're going to see, I'll show you right now. So this will calculate, so you could do a couple trades here. I don't ever over trade like this, but some people do. I just don't. So this is going to calculate your A, right? I don't want to enter here. I'm just waiting to see how far down this goes. That'll give me the length, right? And now as soon as it's done, we're going to draw a fib retracement from the high to the low on it. Now, what you can anticipate is that B will retrace to this little range, which I have in blue and white here. And this is what I'll label as the bull trap. So again, we're not entering this trade. I want to, right? Like I want to trade this. It looks awesome. And, you know, I'm FOMOing out. Look at all these fucking gains you could have had. But don't FOMO. Patience is key. So we just got our A. Now, what we're going to see is the next bar will test up to here. And then we will see a full retracement of A. So C equals, and this is a general thing. And I'm skipping a lot of time by doing this. This is how I conceptualize Elliott wave theory's correction. But you'll find your own way when you get in there. So see how A is still going. So we're just going to pull our ratio down. And then once A is complete, we'll calculate where our B is. And then this will give us the confirmation bias we want. So if it plays out so that it comes up to B and then rejects at B like we anticipate, that'll give us our entry. If it doesn't, then we don't enter the trade. It's that simple. So C is equal to 1 times the length of A. So there's our B. Ready? So this is our A. So now we're going to take our retracement. Great. And this will come up to this zone here. So we're going to activate this, bring it over so that we know. And A isn't done until it pushes back up. So this could keep going down and that'll still be part of A. So this is still A, right? We're still waiting. And this is the importance of waiting, right? You could have bought up here and you kind of would have bag held. Now, what I'm anticipating is if you buy down here, you'll also be bag holding for a while. So I don't like doing any of that. So I just plan on not doing that by doing this. So let's say we hold here. Then look, this range changes a little bit. It gets a little bigger, but it comes into here. So now we can anticipate a push to here. And this isn't our entry. Our entry would then be, so we'll take, we'll take a trend line, and this will just give you a duplicate. So you just grab this, right? Activate it, and then move it to the B range. And that's where you can expect your entry zone to be. So our entry zone will be this bar, if that makes sense. And now how do I trade that? So I'm not going to sit here and wait for this because there's other stuff to look at and trade. So I just create an alert. So you create an alert at the bottom of your fib retracement, and that'll give you, hey, we're touching that bottom again. And then when it does, you get a little ding, you go to your chart, and if it hits into your range, you enter. Yeah, so this is the importance of not being quick to do shit. So our A hasn't even completed yet. And remember, our B will retrace up to here, but our C is, generally speaking, almost always 1 times the length of A. So B will retrace 61 to 78. A will be 1 times that. So plug just popped off, guys. Holy shit. Those are 500 percenters. Alright, so we're starting our B. So I'm going to clean this up a little bit so we can see a little better. So A down, B up. And now this, because A was such a big gap down, this did become a possible scalp. You could scalp something from here to here. I don't, just because I don't like over trading. But hey, everyone's got there is no right or wrong way to trade. It's just what works for you and what is working in the current market state. So currently my trades are mostly based off of what the market makers are doing, or rather what I anticipate they're doing. Yeah, this is bullish or bearish now. So we're breaking this support here, which is not good, yeah. And that's why you don't enter until you wait. Alright, yeah, I'm not trading clean today. Sorry, BF. I tried to get you an entry in it, but this is not it. We're intact. We're good. You can't break this. If it breaks 13.8, sell it. Get the fuck out. But I think we're intact, and I anticipate seeing a push back to 14.5 within the next 30 minutes. So what I'll actually do on this is plan a trade on that, because that's not bad. What the... That's not right. Yeah, so this is actually right now is where you'd want to enter. So... So we're actually holding some pretty critical supports on BlackBerry, so that's why I re-entered the momentum reset. So it's not a bad time to enter into a swing trade on this again. I think we see a push probably to, I would say 12.6 today. So yeah, unfortunately, as I kind of anticipated, we're not gonna have the momentum to bust through on AMC right now. I'm still very bullish on it, so don't get me wrong. I'm just not trading it because uh, there's too much IV for this channel that we're in. We're locked in a channel and is trading the most absurd premium prices, which is why I think that market makers and hedge funds are just caking right now. They're just selling calls and then locking the stock in this range. So they're selling calls for like 100% out of the money, 2 to 3 months expiration for like 20% of their entire investment. And then a week later, they close that same call for 5% of what they paid for it. Or, I'm sorry, so they would gain 15% of their initial investment. And that's essentially what I see happening in AMC. But that ends, right? So that can only last as long as the bullish and bearish trading theses are both still around. So what you're going to see over the next week in AMC is extreme volatility. This is nothing, right? So this is a channel-bound stock. There's the bearish theses and there's the bullish theses. Eventually, right, you have to readjust some of your bullish ones, some of your bearish ones. We broke to the downside here, you could see a bullish push up. Didn't happen, right? If we break to the upside here, now you can see a bearish push down. So that's your concern, but this is the beauty of this. Because there's so many bears and bulls, when the stock goes short, right, all the bears are short selling the stock, and all the bulls are selling their positions because they don't want to lose money, right? And apes are kind of just sitting around for the ride. And then even better on the other side, when it breaks down, right, it creates all of this buying pressure. So now all of the bulls are buying the stock, and the bears are buying to close the short position they sold. So that doubles the buying pressure up. So for AMC, I kind of marked this out today, and this is why I didn't trade AMC, was this is too much. This is like a month of major resistance channels, and there's no real reason for us to be able to break through it unless we have a massive surge of new buyers, which would only happen if we break down or there's more news on like a margin call or something. But I don't really trade based on that. I trade on technicals. Space broke resistance, so that's not ideal. So now we're gonna readjust. So obviously I drew this in after hours trading because I was a little concerned that my Elliott wave was wrong. So let me pull up. So this was my first Elliott wave, which would have been here, would have been our A, B. Actually, it's too many hour charts. Let's pull down. So I got mixed up. So I was in a smaller chart. But yeah, we broke my stop here, the 51.93, and it's bringing us down to probably 50 here. So we could see a reversal here. If we push back up, I'll sell half of my position, just because that's how I manage my risks. I don't want to hold a big loser. So, but if we break through this, I'll just keep the whole position. Honestly, AMC's not tanking today, or not flying today like I thought it might. So the volume from AMC should dissipate rather quickly. Everyone was thinking AMC might break 60 today, right? So everyone jumped in the morning, and obviously we didn't break 60, so now everyone's going to kind of leave the trade, and they'll jump into whatever else is popping off. So Wish, Space, what else do we got? BlackBerry. Oh, fucking GTT's down again. Where's my Lambo, guys? I got played on the metamaterials one. That was a loss. Space did fall apart, Brett, but that's the importance of a stop. So when I said that if we hit 51.93, that's my stop loss. If I wasn't talking on the other charts, I would have sold immediately there. Um, because I'm a little occupied with actively streaming, I didn't actually respect my stop loss here. But this is the importance of a stop. So if you see a resistance, right, and you break that resistance, or you're about to break that resistance, as soon as it is confirming a break, you sell your position, because then you miss out on that big loss. But here's the beauty, right? So I'm going to turn off after hours again, and I'm going to show you a very bullish chart. Why does that keep happening to me? I'm going to pull this over here. Yeah. Alright, I switched my Thinkorswim to a different monitor. It's a little better for me. So, if we don't fly back to 52, say by 10:30, I think I'll probably exit most of mine. But again, like I said, I think AMC is going to lose volume, and that volume will come back to the other name stocks. So, Brett, what you're gonna want to do if you have space positions still is reposition them. So, if you have an $80 call, that's probably not gonna be good. Those are always scalps too. If I ever go crazy out of the money, you should know it's a scalp. And I should explain what a scalp is, because I do mention them. A scalp is not a trade you think is going to last. It's a trade that you're capturing a momentum shift. So we went from flat to apish, and that was the momentum shift we captured yesterday. Today, I sold 90% of the positions I had open yesterday. So I'm actually completely on the house. That's just how I manage my risks. But the 10% that I do have on the house are all down over, I think, 40% now. So I should have respected my stop here, right? We broke the 51.93 right here. Remember, the first bar I said doesn't matter. We break it, touch it here, I'm still okay, I'm okay. And we broke it here. This is where you sell, right? And then you miss out on all of this losses. And then as soon as momentum shifts back, you can enter again and save yourself, hedge a loss. But for my calls that I have left, I have $60 calls. What I'll do is, if we push back up, I'll sell them, and then when we go down again, I'll roll them into $55 calls, something that I think will print, because that way you won't make your money back on a position that's too far gone. It's not possible, right? But if you reposition that money into a smaller position that is possible, you can quadruple that, right? It might go to 70. The $80 call would expire worthless. The $55 call would be worth $1,500. So I guess that's the takeaway. But yeah, this is okay. So obviously we would have liked to miss this loss. But I'm not seeing any reason to throw in the towel and call it quits. All right, so plug found a floor. So I just create a 61 alert. And when it crosses that, I'll sell my runners and then plan a re-entry, if that makes sense. So I still have my runners. I didn't sell them. I don't see us breaking past 36 again today. So what I'll do, though, is as we capture this momentum back up, I'm not going to sell them here for 79 cents. No. I'm going to capture this momentum shift back up and sell them for about $1, right? And then anticipate a bearish move down where I would re-enter into next week's position. And that'll just maximize your profits, plus limit the decay you're going to get on theta. But yeah, so as soon as you find a floor, draw your retracements, put a mark at 60. If it crosses that mark, wait for your confirmation bias to see it push down into your anticipated move. So 36 to 34.9 is 1.14. Cool. I don't know math that good, but essentially, so that's a 1.1 move. So what you're going to anticipate is 35. This range is going 1.1 move down. So, right, and this is one of the indicators that I've created for myself that tells me I want to take this trade, right? So you'll find whatever works for you, but for me, I want confirmation bias. I want to see the chart play out how I think it will, and that way, when it does, I feel very good. Like, it's like, hey, I know what this stock's doing. I'm tracking it. So we wait for this range, hope it hits this range, wait for a rejection, and if it rejects down to where we think it will, that's your entry. I was 2 days off, guys. I must have drawn that a long time ago because it was 34. Nice. Uh, this is a trade I'll actually be taking for a swing. This is a setup I've been looking for a while. So I'll pull up the option I want. So I look for the 0.3 delta on 2 to 3 months out. So I found a 0.3 delta on a $40 call, which is trading at the August 20th expiration date. It's at 1.5 right now. I'm going to enter here. Fuck. Guys, I have a really hard time promoting my channel and doing all of this. It would mean so much if you guys could just share my link. All right. Talking space, you cunt. Excuse my language. So, we broke here, so we'll push at least down to here, which we just did. And then we'll test all of this shit. We might actually see 47 would be the next real support. I don't know what ATR is. I don't know what is a good indicator. I think that indicators are only as good as... It's not the wand, it's the wizard, is what I would say. Like, for instance, would you use the oversold indicator on a bullish stock? Like, if you use this oversold indicator, did it go down? No. Okay, let's use it again here. Did it go down? No. Okay, let's use it again. How about here? Did it go down? No. Well, why is it that this oversold indicator, right? Every time it's hitting oversold, it doesn't do anything. It's because the stock's bullish. You're not going to worry about the oversold. So when people look at indicators, they don't really comprehend the logic behind them. But let's take a look at the over... I'm sorry, I was saying that all backwards, guys. I was talking about the overbought. So when a stock's overbought, it crosses up here. And then as the blue line crosses the white line, it's saying that momentum's shifting bearish, right? So you'll see the momentum will shift. But you see how this is going flat and not down, right? So that's not a trade you want to take. You don't want to short here because this stock is very bullish, right? What you want to do is only respect the oversold indicator because it's a bullish stock. Now check this out. Every time the stock hits oversold, you're seeing, rather than a flat trade, either big gaps or, right? So let's take a look. Oversold, right? So it crossed into our blue range. Oversold. We went from 50 to 57. Now let's take a look at today. So we're oversold here, and we're at 50 again. And now our blue line is crossing our white line. So we're not going to ever worry about the overbought because this is a bullish stock. So Monroe, I am down to all suggestions. I would love it if someone would help me with that. I'm not very technologically apt. I mean, I am, but not when it comes to social medias. I've pretty much isolated myself from social media, and I've never used TikTok. But yeah, so as you hit this oversold indicator on a bullish stock, that's going to give you a confirmation bias of one of many of which you'd want before you go long. Personally, I use a few. I use the Elliott wave theory. I use RVI. I use option trading. So I'm always monitoring how the options are trading. So remember when I entered at 1.5 here? Why did I want that? Well, what I looked at on Corsair, let me go back to Corsair's chart. So first thing is I look at the underlying. I wanted to get in here, right? So I got in, and I stop lossed out, I think here, right? And then I didn't ever get back into the trade. So I had a successful trade from here, sold for a profit, but I stop loss. So as I have a profitable trade, my stop loss increases so that I never go red. So I sold for a profit here, and I never got back in, and I missed this massive push. So then I'm trying to figure out how I can find my play into the stock, right? So this is what I see, and I don't normally draw everything out just because it comes second nature, but this is Elliott wave correction. So your A is here, and I'm going to activate this drawing, the trend line, and trend line, and I'm going to bring this over to the push. Watch. Did you see where we moved from? And they say you can't charge shit. Now, that being said, I get it wrong. So when you look at this, because there's different waves at many different time frames, This is a correction that took place over a couple trading days. So this actually is more like, what the fuck, this, right? But that's still 1 times the length of A. So you create your box, right? Once you find your Elliott wave theory that you want to trade off of. And when you find your confirmation bias, you enter into the trade here. So I did that. So I guess that's my point. Like, I can kind of just see the pattern ahead of time. So because I wanted to get into the trade and post it on my Twitter and enter it on my brokerage, which takes a lot of time, I didn't explain any of this ahead of time, but that's what I was looking at. And then the second thing I look at, right? So number one, is it where I want it to be? Did it play out how I predicted it'll play out? And so from here, as soon as we hit this point, I knew for a fact we were in an Elliott wave, right? And it was a correction of a bullish because we didn't break any major supports. It's still bullish. So the next thing I look at is the option that I want to trade, which is the 820 because I want to swing this, right? So I'm looking at the 820 $40 call, and that's trading at 1.5, right? That's where we entered. Now, what's the beauty about where we entered? Well, we see this massive volume bar. We see our RVI has reset completely, and we got the absolute low of the day. Not a single person got a lower trade than we did today. So that's the beauty of everything in combination with each other. And that's what you'll kind of develop as you continue to grow as a trader, is these intuitions and how things play together, right? How does this option chain affect the underlying? Do derivatives really determine where a stock's going to move? I think so. So you see this massive volume coming in right before we entered, right? And I was kind of looking at it there, and I was like, I still see a little more down, blah, blah, blah. Guess what? Within a minute, it hits to 1.5, and we got the best entry of the entire day. And that's a good feeling, right? So now it's for what you anticipate, right? So we got our entry, so I'm going to clear this drawing set so it's a little more smooth for everyone. Now, I want my exit. But I don't want to use a retracement to get my exit. I want to use an extension. So I'm just going to find a nice low, high, low. And I'll show you every time I do one, you're going to see how it kind of lines up. And the stock will naturally move in these ranges. So it's going to get a little messy real quick, but bear with me. And now what I'm looking for is, so we just tracked 3 low, high, lows, right? Oh, where's the stock like to pivot in each one? So on the first time, it pivoted at the 138 mark. Okay, so we're going to delete this so we can see the second one. What about the second one? It pivoted at 138 to 161 mark. Cool. We're going to delete this one. Oh no, that's not what I want to delete. That's my major. So this is what I trade off of, the big picture extension. And then you can plan your trade within the big picture using a smaller frame. So removing this one, and now I'm going to actually come here, right? And now I'm tracking where my next shift will be. And this is where I'm going to profit take. Cool. And now you're ready. This is how you do your stop loss. So you see your major support that we just was just a resistance. So as a resistance becomes a support, so see how we bounced off of this 32 mark 1, 2, 3 times. Well, that's a resistance, right? But then you see how we broke through it. Now we touched it here, bounced off support, and we touched it here, and we just confirmed its support again. So now that becomes our new support, right? So the stop isn't your support. Your stop is the start to that push up. So it's going to be right here. So your stop is the 31.8 range. Did that make sense on the Elliott wave? All right, so I just bought to close all of the short calls that I sold on space. So anytime you have a trade go against you, you should really just immediately sell calls on top of what you have if you want to continue the trade. And if you don't want to continue the trade, you should exit immediately. You shouldn't just sit there and wait while your money gets taken, though. So sell calls, which I did yesterday. And then today I just closed out the calls that I sold. So I sold 20 of the $59 calls at $2 a pop. So $200 for a contract I sold them at, and then today I bought them all to close for $1 a contract. And the reason I did that was so that I could let my long legs use the profits from that to enter into my long leg and stop losing money on the short leg. because I think this goes up from here. So, so I sold to open calls, which is a little bit more advanced than I think I should be getting into. But uh, once you, so I created a debit spread. I entered a single leg. It went the way I wanted it to go. I created debit spread once it's in. Once I make money on my position, and then to create a debit spread, you're selling a higher expiration call on top of your call, which is a bearish position, and then whenever it dips again, because remember, short term I'm bearish, but long term I'm bullish. So I don't want to lose money. So I sell a bullish position, which is bearish, sell the call, and then I buy this call, and I use those profits to enter into a longer position. And then same thing, if it hits up to the 53 range, I will immediately sell a call again, right? And then as it rejects this resistance, which it will, I'll buy that call back right down here, which it will test again. So I anticipate we'll test 53 and then back to 51. So as we hit 53, it'll look like this. So you'll sell the call at 53 and you'll buy the call at 51. And this is going to be on top of your long position. And then that should net you like a 10-20% gain. And then use those profits to go into your new leg if you want to go bullish. But again, this is stuff you need to do while you're in the money. So creating a debit spread on a negative long leg is not ideal. Creating a debit spread from a neutral position, meaning you buying and selling the calls at the same time, is the market maker's expected move. Creating a debit spread where you enter a naked call, or not naked, it's a bad term, where you enter a long call, and then it goes the way you want it to go. So say you get 40% profit. At that point, if you sell a call on top of it, your debit spread is now already 40% in your favor. So as you enter a position, if it goes the way you want it to go, two things. One, take profits, or two, enter into a spread, a debit spread, and that way you limit the theta decay, plus you also hedge yourself, plus you're securing your profits. So space is moving. Space is going to pop, impulse. So what are we doing? So we see technicals we like, so what do? We pull up the option chain, we look at a position that we think is reasonable. So let's take a look at the July 9th page. And we find our 0.3 deltas. So the $60 call on July 9th is trading at 2.3 today. So we're going to copy this. We're going to go over to our trading active trader, paste it right into our options tab here. And then that is what you want to look at. And what are we waiting for? A massive volume bar. So you will see that the volume will pick up right here. And this is all things that are confirmation biases. So this is my thesis is being confirmed every time something I predict comes true. And that makes me more confident in my trade. So we're tracking the price now. So the low of the day was down at 2, and we're up to 2.3. Now, I'm telling you, this is going to pop. Like, we're going right back right now. So I'm entering here. But, again, I'm not a financial advisor. It's your money, your risk. I hate the idea that I lose someone money, but I also want to get my information out to the world because I think I could help a lot of people make money. So it's kind of a dilemma I'm in, but decided to say fuck it. It's your money, you're an adult. I'm telling you guys, it's happening right now. I'm going to post it on my Twitter to see if anyone will. Yee! JP, you're getting it, dude. So, why is there an impulse? Because this is a combination of short sellers and paper hands, or rather, smart traders who don't want to lose money. So, as this happens, it creates two buying opportunities. One, a buying opportunity for the bulls, and two, a buying opportunity for the bears. The bears who just shorted it will all start to buy to close their positions for some nice gains. They shorted it from 15 to 13. Okay, now that's the bears, right? So they're all going to be buying the short position they closed, and then also the bulls will be buying because this is awesome buying opportunity. So as soon as we break this resistance, which we'll bounce off of, it won't be clean. Should go like this, and I would say right here should be where we expect a little consolidation. Ready? Remember, we break down bull trap or bear trap. Dip to the fucking rib. Right, this is the bears. They're all saying, "Oh wait, this isn't bearish. This volume coming in is not bearish." And then, in a second here, they're like, "Oh, I shouldn't have shorted." It's my impression. Oh, so my plug entry, guys. Remember my re-entry plan? So that did come to fruition. Remember I said that we want to see the confirmation bias. So the A, right? So we'll write it all out for everyone here. A, and then our B, and our C. So now we will adjust our C line, right? So we're just going to grab it and bring it over to where B ended. And C is 1 times the length of A. And then this should give you a solid, what I would say is this should give you a solid entry strategy into scalping, actually pretty much into everything for trading options. This has been my bread and butter for option trading. And this is kind of just my take on Elliott wave theory. I'm sure there's going to be some, eventually down the road, some Elliott wave theorist who comes into my channel and tells me how horribly wrong my Elliott wave theories are, but that's okay. I make a lot of money. So yeah, back to this though. This will give me an entry range, right? So now I'm going to do a plus minus range. So essentially, I'm going to give it a little leeway, but this will be where I anticipate our next move up, right? And here's the trick. Because this is it's going to be a scalp, this trade, because the IV's high, right? I don't want to buy a swing trade when we gapped up 2%. I want to buy a swing trade when we gap down 2%, right? So this would be a scalp. So you'll profit take right here. So this is your trade. So you'll see it. It'll be quick. So I'm going to pull up the plug position. Let's go with the $36 call that we have here. And as it hits to this point down here, it's going to get real gamey, because this is where everyone's like, fuck, like we should profit take for the bull or bearish traders, and the bullish traders are like, shit, this is looking real good. So watch, volume's going to start spiking, and this is kind of where you're entering. So I'm still waiting, but in a second here, if we don't see any more down, I'm going to enter. So waiting for it, but do you see how this volume's spiking? This is all confirmation bias to the same thesis that I made 2 hours ago, right? And now 2 hours later, that thesis is coming to fruition. So from here is where you make your trade. I could have traded here to here, but that's a risk, right? Like, I don't know that it'll stop going down. I'm assuming it will. So what I want is more of a certainty thing. So now I can enter here at 0.68 because we didn't break any lower. And it should just go right up to here and be trading at about 80 cents a contract. So that'll be a nice 30% gain in a matter of 2 or 3 minutes. But yeah, that's the beauty of trading options and having a solid trading plan. So see, volume just surpassed. Okay. Now volume's slowing down. So what are we looking at? So we're seeing a decrease in the bearish selling volume, right? So as it's starting to sell from here, you see how it's progressively getting less and less. That means that a trend shift's coming. So we're touching into my range here, and we actually did touch it, which is beautiful because I love being right. So I'm going to enter again at 0.62, and then as it should bounce right back to here at a minimum before losing any momentum. And that's the scalp that you're capturing. So because this is close to expiration and out of the money, as soon as this loses momentum, you don't really want to be in it anymore. So this trade is going to be very quick. It's a quick scalp. It's going to go here to here, and within 20 minutes, you should sell it for 20 to 30% profit. So 0.62, and we're looking at our clock now. So trade plan, enter 0.6 to 0.65, sell 30 to 1 hour later for 30 to 40% or 20 to 30% profits. And this is what essentially what my brain is telling me while I'm trading, is I need a set plan. If I don't have a set plan, I just throw my money at shit and lose it. I'm like, oh, that looks good. Let me throw some money. No, it's not a good trade. So this is the plan. We planned it up here. We said, hey, I'm going to wait for this to sell. As soon as it sold, found a little support, we drew our retracement. Hey, now we know that our wave A in our correction was from, it's just over 1.1, right? And then we're waiting for our wave B, right? So we anticipate where wave B will end. And this will be our confirmation bias. So guess what? It ended exactly where we anticipated it would. So now we're going to do it confirmed our thesis, right? So we're going to just extend our trend, or rather just draw a line the same distance, so 1.1. So I do it by taking a trend line, drawing a high to low on the A, and then just activating it, and then just moving it, right? So I can just move it to the B, and that'll give you your entry zone. Lo and behold, right? We hit my entry box, and holy shit, look at that, right? So that's as simple as I can break down my trading strategy, I think, without having you learn the entire Elliott wave theory. So see how there was a massive spike in volume? That's misleading. I'm going to show you why that's misleading. I'm going to break it down to a 1 minute chart. That's not bullish or bearish volume, that's bullish volume. And I'll show you how I know. So in that bar, the majority of the volume was bullish. So it's a 6 minute chart, so take 6 of these, right? It's all bullish. This is bullish, this is bullish, the bullish, right? So when I go back to my 6 minute chart, it looks like a volume increase on a bearish tick, but it's not. These are volume increases on the bullish parts, right? So this will be a strong impulse wave is my anticipation. But anyways, you're profitable if you took the trade, so. No impulse. Where's my impulse? So I saw. Uh-oh. Alright, let's chart us the whole thing over again. So we're going to go to a bigger time frame because we're not on track with space. So I need to reevaluate my thesis, right? Because my thesis hasn't been right. So I'm not going to keep trading on a wrong thesis. That doesn't make sense. So I go to a bigger chart because it's superior, so it means more. And then I reevaluate. So from a 4-hour chart, let's do an Elliott wave correction. Like checks 1, and then just delete all this shit. Alright. So, I'm going to try my correction again from a 4-hour chart and see if that gives me a more accurate representation of where we are. So, we haven't broken any major support, so I'm still bullish, but the time restraint's going to be really shitty on those 7-2 positions. So, what we need to figure out is how to salvage, right, if you still have those positions open. So, alright, so we did our A, right? So let's draw a little trend. So A is from 57 to 52. It's a pretty big move. It's a 5-point move. So we're going to activate the trend line, right? And then we're just going to bring it over to B. And this is where we anticipated the shift to take place. So this can be two things. One, right, the Elliott wave is invalidated. That would happen if we were to break 40, this zone. Anything into here would invalidate that. So we're still on trend here. I'm sorry, I drew my, let me redraw this. Yeah, it's a, maybe extended. Fuck. Alright. Oh, that'll do it. So let's readjust our A length to the appropriate A, activate it, and then bring it over to B. It's not ideal. And this is where a 4-hour correction chart is saying that the bulls will come in. So again, this is part of trading, right? Is that you're going to be wrong, right? There's no omniscient being that can tell you where a stock's gonna go. It's you're doing the best you can with the information at hand. So with that in mind, right? Yesterday I thought we were in an Elliott wave that would correct up from here. Today, that was invalidated when we broke past here. So that's why that was the importance of that stop that I missed. And now I'm bag holding just because I don't really want to close for such a big loss. But yeah, this essentially should be a 4-hour Elliott correction zone. Would put our buying range into, more realistically, this. Anything below this, I'm 100% out. And we're entering into the buyer zone, so it should see a little bit of a bullish pushback. But the beauty about this isn't a natural stock movement. This is a shorting. They shorted the stock to get it down here. So what that means is that they all have to buy their positions to close. So it should snap back faster than you think. But with the weeklies expiring this Friday, I don't know that the market makers will let it go anywhere close to 60. So we're going to, if you do trade options for the weeklies, be in the money from here. So buy like a $50 call or at the money rather than out of the money. Your max potential return will be less, but I don't see this closing above 60 this week anymore because all the premium that they collected from selling those hundreds, I think it was like almost 100 million $60 calls, which, yeah, that's like a lot of money. They don't want to give that back. So this is my wishes Elliott, right? And it worked out on our yesterday chart. So A, B, C. But then today it rejected it. So that tells me that I need to reevaluate. Yeah, so we just left a bullish wave here. No, we didn't. We held it. Oh shit! Look at that. It's real close. So in validation levels, essentially this wave can't break into wave 1. So if we go 1, 2 flat, 3, right? 4 can't break into 1. Can't touch anything in this range or it's invalid. And that would put us into 5 should bring us to an all-time high. So the reason that this so it could have been an extension of wave 1 actually. So this is all wave 1. So 1, 2, 3, 4, 5, right? And now actually that might be, yeah. So then 5, and then we're gonna get an A down, a B up. Oh, fuck, I got it. Sweet. Sweet. So this is a finishing of a bigger wave, an Elliott wave. So, yes, I love it. So this is one of my favorite parts about trading is figuring out where you are in the waves. So I had to go to the extended hours to make it make sense because it wasn't adding up. But here's your A down. So, and this is a little bit different than the corrections we've gone over. So this is gonna consist of more waves. So it's a bigger correction. So it'll have 2 ABC waves and 1 5 wave. So it'll go a correction down. So A, B, C, right? And then a 5 push up. So 1 up, right? So let me just mark it all out. So as a stock finishes a complete bullish push, it means that it'll start a bearish wave. Bullish waves consist of 5 waves, 3 bullish waves, 1, 3, and 5, and they all have 5 waves within them. And a bearish wave consists of 3 ABCs, right? This is when you're in a bull trend, so it'll switch if you're in a bearish trend. So you'll see So wave 5 completes, and then we'll see an ABC, and then we'll see a bullish push, right? So 1, and this is going to be tinier. So 2, 3, 4. Oh, that's not a 4. 4, 5, right? And now from here, so bear. So yeah, I think it looks actually something like this. So this should actually be pretty fantastic if this is actually because that would indicate that this is wave 1, right? So this would be 5, and then a bearish correction, and then a start of a new wave, and this would indicate that this is the completion of wave 1, and then we would see wave 2 right now, which should bring us down, and then wave 3 not good. Yeah, I don't like this this thesis. I'll have to reevaluate that one, but I'm going to take a look at other positions. Plug's doing exactly what we thought. So we entered at the 0.6 to the 0.65 range, and now we're waiting for this bullish shift to take place, which will happen in a little bit. Blackberry, we need to figure out what's going on here. I just think it was oversold. I think that the Bears thought that they could break the trend by getting us into below the 12s. And I think that we held 12 with ease. So I think this is an oversold moment. Um, but because it's not charting up with any of my Elliott wave theories, I'm not going to add to my BlackBerry position. I'm just going to chill until it makes sense again. How you guys doing on Plug? I think it just did what we all thought it would, or rather what I thought it would. Finally. Fucking love it. We left the pure bull trend that SPY's been in so I can trade the QQQs again. I really like trading derivatives on TQQ, and it's just a wonderful stock to trade. So this is a triple leveraged QQQ ETF. So if QQQ goes up 1%, this goes up 3. If it goes down 1, this goes down 3. There's also a bias in which you shouldn't trade this unless you expect a big move, because percents don't work out the same both ways. So if QQQ goes up 1% and they're both, let's say, 100 just for simplicity, TQQ would go up to 103. Now, if QQQ goes down 1%, it would be 100.01, right? Because it was 100 to 1 down 1%. So TQQQ would be 103 down 3%, which is below 100, right? So that's the bias against the triple leveraged ones. So you only want to use them when there's a big expected move. But what you'll see, though, is a move from 122 down to 120, right? A 2-point shift in 12 minutes, which is huge for an options trader. So if you can track your QQQ, if you could track your QQQ, then you can essentially be like, hey, what the heck's going on here? Where are we going? I see a push back to 351 on QQQ, which if we go to the percent change over here, it'll show you the percentage. So it'll be 0.5% move, so it would be a 1.5 on the TQQQs, which is a pretty awesome scalp for a midday trade. So, so that's just another thing that I like to trade. So, but I won't trade anything that doesn't have appropriate volatility. So AMC, for instance, right now I can't trade because look at the ridiculous premium prices. Like, to buy a $70 AMC call, which, just to put this into perspective, that's over 15% out of the money, right? It costs you $263. And this expires in 2 weeks. So you have to have the stock go over 20% to break even, and you have 2 weeks for it to do it. Now, that's not a good spot to buy a call. So that's why I don't trade AMC right now. I'm waiting for it to break the channel. The death channel is in. Oh, I fixed it. I didn't think that one through. I was like, where the fuck is the bar? uh, where are the candles? How's our Corsair trade doing? Oh, there she is. Great. What's going on? Why does my charts look like this, guys?
No! This is a pretty crucial moment in the plug trade. Um, so this is essentially where we thought we would shift. Now, there's nothing saying that it'll be an instantaneous shift back, right? But what we don't want is to break this support. That would be bad. So for the plug trade, oh, it's still good. It's tough for me. I'm having a hard time managing my positions and doing all of this, making stupid mistakes like not respecting my stop losses. Okay, I'll just take smaller trades tomorrow and tighten it up. Those crazy fuckers did it. Fill the gap. It's absurd to me.
Hey, Yo, what's good, guys? I'm back. This whole stock market's taking a dip right now, huh? Look at all this red. What is happening today? Where's all the money going, guys? Like, what stocks are being traded? I can't trade him, Ryan. It doesn't have any derivatives, and I don't want to go long on something with IV like that. I feel so undertooled when I trade without options. We skipped this entire fucking correction. Like, it doesn't make sense to me. How do we just gap up here? We're going to fill this. I'm almost certain on it. Uh, it's just I don't trade speculatively. I trade based on my technicals. So I missed that trade. And I don't have a trade from here. Like, I could short speculating that it'll go down, but it's not a logic-based trade, right? So it's against my better judgment. Like, everything's range bound, and everything's red. Every single stock on my list is red right now. What the fuck is TK? At least BlackBerry's doing good. So Plug filled this gap, um, which blew my mind. For them to be able to short the stock from 36 to 34 after this much buying power comes in, it's just absolutely unbelievable that they let short positions leverage like that. They don't have this much money, right? So they're taking a margin based trade, which is a short trade on margin, and using an absurd amount of money to drive the price down. And it just blows my mind that that's allowed. Like, you shouldn't be able to trade with money you don't have. Like, you can set up, fake money, like a covered call, for instance, is like a poor man's covered call, by buying like a single call and selling one above it. It's equivalent to having 100 shares, right? But you're doing it legally. You're not manipulating the rules. It just blows my mind that that's allowed. So back to this trade though. I like Plug, and I think that this should work out for us. I'm very real bullish on for non-meme stocks, Corsair, which is a gaming company, and Plug. For meme stocks right now, real bullish on Space, which after we realized my Elliott wave was wrong, we did another one, and it actually put our range to this. So let me show you. We had to do another Elliott wave with the extended hours showing because my Elliott wave was invalidated. So that meant something's off. So I put the extended hours on. And the B retracement is right here, right? So we came up to where we expected, and then here is our A to B, right? So this is the length of A to B. We're going to activate this, bring it right over, and look, the stock hit there. So I was off on the first one, and that's why I took this loss today. And then from here, though, lost today as in I was off on this trade here. I thought this was our C, but I was doing an Elliott wave without including the after hours high. So once I included that and I did another Elliott wave on Space, what I found was that the B expected range would actually bring us from 56 down to 48 or 47, high 47s, which is exactly what happened. So this is giving me confirmation that I'm allowed to still be bullish, even though, hey, this first part didn't work out, right? So if you're wrong, you can't keep trading on the same thesis though. So you have to re-identify where you went wrong, and then from there, once you start building some more confirmation bias, you can enter the trade safer again. Uh, but this actually could be it. I'm bullish on Corsair will because I think that they have a future monopoly on the entire gaming industry from all of that. And then looking at it from a fundamental standpoint, their stock is trading significantly lower than all of their competitors, but it has much less debt, better revenues, and higher gross margins. So from those two perspectives is why I'm bullish on Corsair. And then people have been bullish on it for a very long time, like Reddit posts and whatnot. So I've been watching it for a long time, waiting for their clout to sell off, because essentially that's how stocks move, right? It goes like the mania phase, and then everyone who was excited about it lost their interest. They sold that stock, right? And then eventually the big buyers come in, and then everyone who sold that stock's like, "Fuck, shouldn't have sold." But yeah, so for Corsair, I've been watching that for a while. And this is what I've been seeing. So we just this massive jump from 30 to 42, and I haven't taken a trade since then, just because it was a little sketchy to me. But we've kind of chilled out, and then at this point, we entered from our bullish or bearish into a bullish trading thesis, and you can kind of draw like with your mind a little curve, kind of like a skateboarder riding this, and that's kind of how the stock should trade. So it'll probably go up and then cup and handle and then up again. So that's kind of what I drew here, if that makes sense, on why I'm just drawing random lines. They're not so much random, it's more so how a stock should move cyclically on this curve. So with my Elliott wave theory numbers in mind, I'm looking at the patterns, blah, blah, blah. I think it'll move cyclically up too far and then down into this range and then way back up. So obviously, as soon as it comes up above this, I'm trying to sell, and then my entry would be this. Corsair share price potential, a lot. So they'll be probably $40 by the end of the year, which is a pretty big position. It's like a 30% gain. I hold stocks in my Roth. Corsair is one of them. I bought a bunch of Planet Fitness is probably my most wonderful stock ever. I was like, the gyms aren't. So I love working out. It's like my second favorite thing besides trading stocks. Like when the COVID-19 hit, I just YOLO'd it on fucking right here. I YOLO'd it on Planet Fitness, and I made a stupid amount of money on it. It went from 50 to 90. And plus I was long 10% options out of the money too, so that was quite a big positional gain in my Roth. But it's trades like this. It's where you're finding mismatches, right? Like Planet Fitness owns LA Fitness. They own so many gyms. It's this national chain that's not going anywhere, right? Like there's not another entity that's gonna pop up out of nowhere. No, in fact, what I see happening is Planet Fitness gains more power because of COVID. All the smaller gyms who don't have franchise money will end up shutting down. Planet Fitness gets more members, blah, blah, blah. So everyone's like, gyms are dead, blah, get out of here. Actually, that's what I went wrong on gyms. Long on gyms. So yeah, I kind of just keep my charts because this is like, once you get into a good trade, it's like just beautiful to look back on. I love it. I just love it. So yeah, I'm much more speculative with stocks than I am with options. Options should be, I would say, largely technical based because you're trading momentum. Now, with a swing trade, that changes things a little bit because it's more so price action based than momentum based. But with most of the options that you see being traded, they're not based on price action. They're based on probability. So, which is based essentially on the trajectory, which is due to the momentum. So as this stock's on this trend line, so if you look at the 50-day moving average, right? So if you just kind of draw this line, right? That's essentially how they're pricing options throughout this trading period, right? Now, as this stock comes into a bearish trend, right? So you can kind of follow this one. What you're going to see is that the option chain's pricing, even though at this point in time and this point in time, they're the exact same price, right? Is drastically different. Now, why would they be drastically different? Because the momentum's down, whereas this momentum's up. So the probability of this for a call to go into the money is significantly higher than the probability of this for a call to go into the money. So as an options trader, you're looking for mismatches. So a mismatch might be like, hey, look how bullish this shit is. It jumped up to 86 and then it crashed, right, down to 65. Now, that's a mismatch. It didn't break this support, so that's an entry, right? Now, IV's low here, boom, crashed. IV's low here, boom, crashed. Now, IV here will be lower than the IV here, even though this went lower. Why is that the case? Because it's range bound now, saying from this little square, right, at the start of it, so from this circle area, right, we're coming into it as an uptrend, and it bounced down once. So it still thinks that there's a lot of chance that it's going to do what it's done before, right? It's going to bounce and come back. So every time it does that, it bounces, tests, bounces. IV will be lower here than it is here. So you're always looking for that second dip, and you're always looking to get in when the IV is low. So for a swing trade, you're essentially looking for something like this on the right side. For a scalp, you're looking for something like this, like a big dip and then a buy. So they're very different on how you would trade them. And essentially, for a swing trade, you want to be in kind of a downtrend, about to leave into an uptrend. So when you look at something like BlackBerry, that's why I'm swinging BlackBerry right now. So you see how we're coming into this, or we're leaving this major downtrend, and now it's starting to come into an uptrend. We just had a handle, right? So cup, and now the handle's forming. So it'll kind of cup and handle a few times from here. But what you'll see is there'll be a little U here, a little U here, a little U here, and those are all another indication of a buying indicator. So plan your trades out, know what you're trying to do with your trade, and then from there determine whether you need to be trading based on price action, which would be a swing, or based on momentum, which would be a scalp. I don't really trade leaps that often. Some people do. A leap is like a swing trade times 3, so it's like a year long essentially. I think of swing trades as 2 to 3 months. I don't know the exact definition, but I like swing trades the most. I like scalps because I'm a degenerate and it's really easy to make money scalping. And I don't really trade leaps, but my favorite thing is definitely leveraging, making money like a market maker. Once you have an option, go deep into the money. Don't ever sell that shit. Just fucking roll it and sell calls like you're a market maker. So now instead of buying contracts, you're collecting premium, and you're using that premium from a contract you bought in the past to then buy other different contracts. It's kind of like this self-feeding success loop. So once you get a successful position going, you start monetizing that position and sucking out as much money as you can from it. How do you do that? Well, you sell calls at a price you'd be okay with losing that stock. So if you bought a $100 or a $50 call and you're selling $60 calls on top of it, you'd be okay with selling that $50 call for $1,000. But yeah, so trends shifted in BlackBerry.
Now, what the bulls are trying to do is to continue this two trend lines that I kind of drew. And what the bears are trying to do is we'll draw their trend lines. Essentially, it should look something like, it's just really not a good spot to start. All right. So you kind of want to cut out the extreme outliers when you're doing a trend line, just because like it doesn't help. But the bears are trying to trade on this trend, which is pretty steep, if that makes sense. So what does that mean? Well, it means that it's easier for the bulls. So it's actually a bullish pattern, even though it's not flagging up here, because it's a falling wedge, if that makes sense. So a rising wedge is bearish. A falling wedge, even though it looks like the stock's going down, this is a bullish pattern, and I'm going to try to explain why as best I can. So essentially, stocks move not because of unilateral traders, but because of the battle between the bulls and the bears. So every time you're bearish, you're shorting this stock at supports or trend lines, essentially. So it hits this trend line here, and you're shorting it, and then it took, boom, 10 trading days for you to get to the bottom. Now, the bulls buy here. It took 1 trading day to get to their side. Bears buy 3 trading days. Bulls 1. Bears 3. Bulls half a day. Bears 4. So the bulls are making more money than the bears on less trades over less time. So that means that this is actually a bullish struggle between the two, that I think the bulls will overcome the battle between them, which will force all of these short positions to re-enter here, right? So they don't want to lose money. So if they shorted from here, they're going to have a stop loss set to right here. At least I would, right? So if I shorted the stock from 17 and it came all the way down to 12, I would put my stop loss right at this $14 support. So as this stock breaks down, it'll create a wave of profit takers from over here who buy in, create a wave of FOMOers who buy in, who've been making money on this trend, the bulls, and it'll force, as the stock rises up from that buy pressure, it'll force all of these positions, who, remember, the bears have been in their positions for longer amounts of time because it takes less time for a bull to get to the top of the channel, right? So the bear, right, is in these positions for a longer amount of time, making less money, and they've been holding them for a week compared to the bulls holding it for a day, right? So as this momentum shifts, the bulls are ready to jump in. They've been jumping in every single day, and they're getting these 3% gains, right? Boom, boom, boom. So the bulls are ready to jump in. The bears are trading this slow trade pattern. So what happens is it'll catch the smart momentum traders from over here, will profit take. The bulls will do what bulls do. They'll buy. And then all of these traders who have been slowly making money are going to get caught in their trade, which will be where we see a push immediately up to likely the line. Likely this resistance and support. So we'll touch here, obviously, bounce into this channel, and then I see us pushing into here. These will be my profit taking areas. So 1, 2. Makes sense how I planned out that trade? And that's the conceptualization. Let me see if I can find a link on what I mean for a rising versus falling wedge. YouTube won't let me post the link. It's too long. So just Google rising versus falling wedge.
I don't really do a lot of sub $5 stocks. I don't really trade pennies. My favorite stock to buy is Purple Biotech. You can do your own research on them, but I think that they will cure reoccurring tumors, and I think that they will be bought out for an extraordinary amount of money. Their pipeline is absolutely nuts. They have some of the best cancer preventative drugs that I've ever seen get to clinicals. They're in their phase 3 studies now, and they're currently working with Bristol Myers, Lilly, and one other major biotech company, collabing with them. And the results for essentially with cancer, the problem with a lot of cancers is if you kill it, it comes back. It's reoccurring, and the drugs on the market currently for this, they aren't effective, meaning they last a little bit of time, but it's the cancer will come back. So the new drug, the NT219, I think it is, it's like 99% successful in removing reoccurring tumors. So you do your own research on that. I think that within a couple years there'll be a $50 stock. So I have an extraordinarily large position in Purple Biotech. I don't enter it unless it's below 4.5. It will dip below 4.5. It does this shit all the time. It gets hype, right? People buy in. Oh my god, they're gonna get bought out. I look. Maybe if it was my entry position, I would enter above 4.5, but it's not my entry position. I have many shares, so my rule is 4.5. Every time it goes below 4.5, I pick up shares. This is my my hidden gem to the world is Purple Biotech. Yeah, they're down a hell of a lot, but what's that matter? Look at their pipeline. They have so much cash on hand. It's a buyout play. So this won't. The problem with this, Will, is you're asking for what I think you could make the most money on, and this will make you the most money, I think, but it's not going to be tonight or tomorrow. In fact, it'll probably bleed and trade around the $4 to $8 range for the next 6 months. It'll trade like this. So, with that said, I would take a look at Purple Biotech. And that's the only one I really want to recommend right now for under 5. Sorry, man, I don't trade pennies enough to I tried GTT, and it bit me. Like, I'm still very bullish in GTT, and I'm not selling any of my position. In fact, it's recovering pretty well right now. But, oh wow, I did a whole Elliott wave on that. That's cool. So this would be an example of a rising wedge if it was at the top here, but because it's at the bottom, this could be two things. One, it could be a bullish reversal pattern, which would essentially just be a double or triple bottom, or this could be a continuation pattern, which would be you looking at something like in a box, essentially, like, oh, it traded range bound here, I guess it's going to come out this side, right? Like, that would be a continuation pattern, but I don't see that happening. So I would say that this should continue up from here and we shouldn't see any downside, but 2.2 is very reasonable on this. Did you guys buy those puts? Remember I said if it broke this line I should buy a put? My alert didn't go off. I didn't set the alert, so that didn't work. Oh no, you know what? I did set the alert. I'm sorry, I'm on the day chart. So I set that alert here. And it's not hit it. But yeah, so I was bearish on 628 on this. So I should have shorted here the $7 stock, but $7 put was trading for 50 cents premium. So today it would have been over 200% profit if I'd bought that. So on 628, I said I'm bearish. I didn't take the position because I don't generally trade bearish as much as I trade bullish. And I don't like to overtrade, so I wanted to, but I didn't. And today, looking back on it, it's just one of those. It's like, it was such an obvious play. It's like Express didn't have any reason to be at $9, and then as soon as you saw it break here, it's as soon as it broke this gap up, right, it becomes bearish to me. So as soon as we broke this major support line, which is essentially half of the gains for the day are just gone, like that tells me that more gains are going to be gone. So that's that entry. Missed that one. This fucking company, all they do is bleed money. So AUD, actually, as you can see, I kind of charted my Elliott wave here, so I didn't really do the thing, but I'll show you. So A's down, right? The B will be anywhere from the 50 to 78 is actually the numbers, but let me show you. So as you look in, you'll see, oh, it just crossed the 50. So now we're going to remove this. I'll do a real one. So we're going to take a high to low from the A, and then just activate that and bring that over to our B high, right? And that will put us at 6.86 was my expected shift. The shift was at 6.91. So yeah, just kind of figure out how you can increase your foresight, and then build trades that are based on that foresight and the confirmation bias. So my trades aren't just, hey, I like this number, I like this. No, I need a few things to line up before I enter into it. Otherwise, I feel like I'm gambling. Hey, so we went to our 4 hour on space because we missed it. And what we found was we needed to, for it to make sense, I needed to see the after hours trading session. So, sorry, it's a bad drawing set. There it is. So, when I went to the after hours trading session, our A was from 61.5 to 52.5. So it's a 9-point swing. So now from our B, which a B is going to be a retracement of A. So a B's are always going to be, I like this range, but the actual expected range is 50 to 78. I just prefer to see it hit the 61. And then from here, we're going to take this drawing. And it's a line, so boom. And then expect a 9-point shift down from here. So 57.5. What do we go down to? 47. 47.7. So I was off by a little bit, but essentially you want to make sure that your chart matches up with your theory. And if it doesn't, you need to stop trading and readjust it until it does. So if that is my new theory, right, if this does become C in the entry, then I would expect a wave 1 to come up from here, or another correction up. So a correction up is opposite of a correction down. It's 3 waves. It'll go A up, B down, C up. And it's the same thing except for backwards. So just draw everything upside down. So we would track our A by going from low to high. So let's say it goes all the way up to here, right? Our A isn't, so this is upside down, I understand. Our A is up here, right? Now, our B, we could expect to hit in the 50 to the 78 range. Over here. So if I'm correct, there should be 2 options I have. One would be a correction up, A, B, C, which I anticipate, and then a continuation of wave 1. Or we'll see a slow and steady push up over the next week. But
either way, we're going to see a bullish continuation from here. Invalidation would be breaking below this support level here, would invalidate my theory completely, and I would have to find a new one. So as you can see, the stock didn't even come close to touching this. I mean, it did, but you get it. I don't like my stock list today. Ugh. Wish. Hey. So remember we like trading channels. So let me zoom out on this and show you what I got. So essentially, a bigger trend. So ABC is filled with another ABC. It's filled with another. It's like those little Russian dolls. And that's how Elliott waves work. So every time frame has a different Elliott wave, but they always respect their superior time frames. So day chart can't interfere with a week chart, and minute chart can't interfere with a 30-minute chart. So you would follow. It would be a contradiction and a buying opportunity if, for say, your 30-minute chart is bullish, but your 5-minute chart is bearish, right? Because you're gonna follow the bigger picture trend, and then as you kind of get into Elliott wave theory, what you'll realize is every wave has waves within it. So A is a down wave, so you expect, because we're in a bull trend, you'd expect 3 waves total: A down, B up, C down within wave A. Now B, because we're in a bull trend, it's going to have 5 waves total: 1 up, 2 down, 3 up, 4 down, 5 up. C, another downtrend, you're going to expect an A, B, C. Now that will be a major correction. Unlike the corrections you've seen before, which are just minor corrections, this is a bigger correction. So, why is this important? Well, it's important because once you figure out your Elliott wave theories, you can find your invalidation levels. So, wave 4 can never break into wave 1. You can't do it. Just can't do it. So, this wave could never break past this line here. Invalid at 1261. Do you think any of these are going to turn around today, or you think we're just bleeding money for the rest of the day? So these after-hour tradings are actually really affecting everything. So like you can kind of just find corrections everywhere right now if you enable the after hours. And then let's get into a really cool, fun stuff. So what are these indicators I have at the bottom? This is similar to a MACD indicator, except for it shows me different fib levels. So So this is the different waves that this stock has gone through since its start. So it started wave 1, 2 down, 3, 4 down, 5. Right? That's wave 1. Now 2, and this has 5 waves within it. So 2's a foot. So we're looking at a weak chart. It's pretty big, right? Well, these waves are pretty big too. So I'll draw them. So I drew that a week ago.
Just notes to myself for trading. But so now that we see this, right? So this is our Elliott wave 1. There's 5 waves in it. So what just happened? So let's do some cool little teaching. So we're going to zoom into wave 1 here. And I'm going to show you what a completed Elliott wave looks like. So 1's up. 2. So purple's bigger than blue, so it's 1, right? And it's got 5 waves because it's a bullish, right? So this is an entire set. So now let's look at wave 1. You're going to see 1, 2, right? So we'll do wave 1 for you. And remember, guys, I'm very self-taught on everything, so this is how I view it. I could be wrong, but I did do a lot of research into Elliott Wave, but there was no real free content on it. It was more so, and I'm not really one to pay for something, so it's more so just what I could find. And I've been trading with it for long enough to where it's kind of second nature, just looking at the charts. But here's where it gets pretty cool, right? So wave 1, right, has 5 waves in it, and then within the first wave of wave 1, there's going to be 5 waves. So and this is a week chart, so you're not going to really be able to see the 5 waves within this because it's so long ago. I can't show you the weeks that'll show this on this far back, but you'll get the point when we get to a spot that I can. So this will show you 5, right? So those are the 5 waves of wave 1 in a superior set wave 1. I don't know the names of the super cycles or whatever they're called. So wave 1 has your 5 waves, and now wave 2 is a flat, so we're going to see an A down, a B up, and a C down, right? So because it's a bearish wave, it's only going to have 3. If it's a bearish wave in a bullish trend, it'll have 3 ABC. If it's bullish in a bearish trend, 3 ABC, vice versa. So for this, you'll see your A down, your B up, and your C down. Now, what does this do? Well, we just finished where we are currently. So now we can start wave 3. So we finished wave 1. We finished wave 2, and now starts wave 3. So this is an impulse wave, so it's going to be much stronger than the other ones. So 1's up, 2's down, 3 up, 4 down, 5 up. So that would be your wave 3. Okay, so we all on the same page. We finished wave 1, and we got to 4. So we're going to do our A, B, C, and then that would bring us into 5. 5 happens real quick, so it happened within a week span, so you're not going to be able to see 5, but know that there was a 5 wave push up from 4. Okay, so now we finished 1. All right, and now this is one of a 5 wave push on a bullish trend that we saw back here. So let me show you what a super version of 2 looks like. So we'll call this one alpha, right? So alpha just finished, and there's 5 waves in it, and now alpha 2 is coming up. So what are we expecting to see in alpha 2? Well, we're expecting to see a 3-wave correction. So same thing is going to apply on a week chart. The same thing I went over with you guys earlier on planning your entries with Elliott wave corrections. That same thing will work on every time frame you look at. So how do we check? So we do our high to low from our point of 5, boom. Hey, guess what? Where did this stock switch? So our A, ready? A, B, C. Now, I would like you guys to see this beautiful magic. So we know that once wave A finishes, we expect to see it shift. Oh. Sorry, let me remove this and redraw it. I'm struggling. So we know, I didn't see that there was a lower low over here, so I'm just going to redraw it so it's more accurate. So now, we hit this, so remember this golden range, this is where I like to sell after right side of green. So if I'm playing right side of green, I always want to sell in this 61 to 78 range. It's natural profit take. If I'm doing a retracement, I want to enter in the 23 to 38, it's natural entry. Now, we see our wave 1 completed. Now we're in our wave 2, so we get our A. Now, the key to A is it's just the high to low. So how many points down did it go? It went from 27 down to 23 or 24. So we can expect to see a 3-point shift from B, right? So A to B. So B's gonna, so I'm sorry, A is used to get C. Let me write it all out.
So A is used to get C from B. So you get your A. So let's draw a line. Okay. And we're going to move this line over. And that should go from here. Oh, yeah, there you go. So 9 points, right? So it hit this support area, and it gave you an entry zone down here. So we expected a 3-point swing, right? So this is just over 3. 3 point. I don't know. Fuck math. So we expected that 3 points down. So what do you see? 26.27 down to 23. And that's essentially, on a week chart, the exact same strategy that you would use to gauge a correction that you would use on a day chart or a minute chart or any chart time frame you like. So that's what I love about Elliott wave theory, is it gives me a way to view how stocks move in multiple different frames and a rule-based trade system. So if it invalidates any of my theories, I'm out. It's that simple. So remember that gap that we filled? It was unbelievable. So let me show you our drawing set without after hours. So I did not anticipate us going down this far at all. We filled this gap here, and then as you fill a gap, it gives a major buy opportunity. So everyone who just saw this stock go from 34 to 36 sees it back down at 33 where it took off from, right? And they're all like, fuck, let's buy. So they're all going to start buying here. The confirmation that a bullish trader will wait for is breaking of this support line. So 34.65. If we clean break to 34.75, give or take, it should force a lot of the shorts to cover and make it a safe option for longs to go long. All right, where were we? Okay, so wave 3 is generally, it can't be the shortest of the bullish waves, so, or of the odd number waves rather. So let's think of it like this: if it's a bullish stock, it's going to have five waves in the bull trends. 3 of them will be bullish, and if it's a bullish stock in a bearish wave, there'll only be 3 waves. 2 of them will be bullish. Cool. So we know that we're in this bull trend here, and we just finished a grand superset, is what we would call this. I'm not going to go through all of this because it's not really necessary. So we finished our grand superset, right? 3 is from here to here. So does that work? We have to make sure it's not shorter than 1. So 1 is from here to here, which is 10 days. 3 is from 10th to... I'm sorry, 3 is from the 2nd of November to the 10th of November. So yeah, it kind of works. It's weird tracking back so far because I can't look at the actual hourlies. But yeah, that's essentially going to be your 5 waves, 3 and then an impulse. And then what you're going to see after this, because we just finished a grand superset, is a correction and then a bear trend. So A, B, C, right? So it's a steep ass correction. And then 1, 2, 3, 4, 5. A, B, C. So this is the end of the correction in grand superset wave 2, right? So remember, we're still bullish on this stock. Wave 2 can't fully retrace this. Hey, what's up? All right, sorry about that. I had a phone call. So we broke to the top, and now we broke to the bottom. I expect we'll definitely touch the top side. It's kind of two distinct little trends in here, though. And it kind of pivots on a range. So this pink range that I have here, 55 to 37, is a pretty tough resistance area, hence why I have my profit take zone in there. But if we break through that, then we enter back into the 48 to 51 range of trading. So essentially, you can think of it as the instant switch for all bearish traders buying. So as soon as we break, that's why this was so critical for them to short it down, because if we hold up here, then all of these positive positions that they took are now negative, right? And they're paying massive interest on it, and that's not fun for any trader. So that's why you see this massive push down. And then
What's usually followed by that, though, is the smarter momentum traders who are bearish. They use the whales push down to exit. So we see the spike up, they all exit here. They're like, okay, that was a fun run, we can get out clean. Now, that creates the buy pressure you need, and that's why stocks move like this. So this is all right. So retracements, you like this little yellow zone for entries. You don't like the red zone because breaking that 0% one's a little dangerous. So you like the yellow. That's a retrace, not an extension. So what we're seeing on AMC, though, from here is essentially the same thing. So think of it as a split between, oh no, what we just looked at compared to this. Think of two different trends, right? And they're pivoting on this middle 12.11. And that's why every time it goes above it, it's so important for the bears to get it below it. But it's a losing game, right? So if there's more bullish buyers, it's not something they can do forever. So what happens, though, is they'll short here, and then it starts to rise back up, and so that 50 mark, right, we break above it, and they're like, fuck, right? So they shorted it here, and then we smashed through it, and they're like, fuck, and they shorted it again, and now the smart ones are exiting their trades here, right? So they all just exited, and that left, say, probably 30% of the bearish traders who aren't smart still long. But what those 30% don't anticipate is that the 70% who just exited their position are now going long. So that's that massive volume spike you see. So bears, shit, right? Exit. Dumb bears still in. Bear short again. Smart bears go long, traps all of the shorts, right? And that's when you see this parabolic move. So when you look at a stock like this, which is very similar to how we saw plug look, right? Or how we saw space look, what you're afraid to see is this, right? Which is a breaking of support, or rather of the channel, which essentially I'll draw real quick. So you want to adjust your channels until you get what matches up with the most points. So I want to hit kind of all of them if I can. It's kind of like that, right? So that'll be our trend. And then same thing, so kind of all of these. So you're going to cut out the extremes. And then I have to do the same thing on the left. I have to get the extremes in there. So now this is your channel, right? That the two trading theses are trading on. It's very symmetrical. So it's hard to determine which way it'll go from here. So that actually creates even more of a squeeze because traders get confused. So what you'll see, though, is every single time that you see this massive leaps in these short squeeze stocks is they don't just leap from nowhere. They leap from a few days of being shorted. So, or rather, an extended period of time of being shorted. So this stock was shorted again as it broke out of the channel. They were like, this is the bear's mistake, right? So short, great, and left the channel short, right? Good. Left the channel here. They shorted again, but what they didn't anticipate is that we just finished the Elliott wave series, plus all of the whales just went long. So now what happens is their short positions get blown the fuck up, and the stock goes parabolic. So that same thing will happen here. But did you see, now can you kind of see why I'm a little bearish on AMC? We need that pressure to trap those shorts. So until we see a break down, I don't anticipate any chance of breaking through the 66 resistance. But I'm still long on AMC. That's just my take on it. It's like a fucking gem, guys. Woo. So this is ultimately the risk of trading options. If you bought shares of space, you'd be down 20%, right? And that would suck. But if you buy calls up here, you're down 100%. Now that really, really sucks. So that's the importance of managing your positions and not letting them blow up. You have to realize that you're buying a probability. You're not buying a stock, you're buying the probability of a stock, right? So with that in mind, when the external situation changes, as in if it's on this bullish trend and you're making money, if it starts to dip and your projection is no longer available, right? You have to then reevaluate and change your thesis. Otherwise, your account will be blown up. So you don't want to let losers run with options. It's much more risky than a stock. With a stock, it just goes down 20% and you can hold forever. With options, I'm trading ones that expire in 2 weeks, right? That's a risky position. So any move against me, I have to be very careful with. And every time the IV spikes, I want to sell. It's that simple. Don't be greedy, and you'll do okay. Is keep your trade plans solid. Have stop losses. Sell when you're in the money, or rather when you are profitable. Use trailing stop losses, as in if you go profitable, don't ever let a trade go red. If a trade is green, don't let it go red. And like, I think those three little things in mind will change your success rates. So the trajectory on this is fucked, right? Like, it's not gonna make it to 80 this week. It's probably not gonna make it to 60 this week. I'll give it the afternoon, right? But essentially, the next time that we see a push up, which I did earlier today, but in case anyone didn't, what you're going to want to do is roll your positions into the next week or sell calls. So I've mentioned this over and over again. The power of selling calls is unbelievable. You become a market maker. So take a trade, go profitable. You have two options, right? You can use a few options. You can use a trailing stop loss that'll stop you from ever going red if you're green. You can sell a call on top of the call you already bought, and that'll lock in your profits, but it'll minimize the max gain. Or you can sell part of your position and leave some runners. But if you're profitable, right, don't let it go red. How do you let a trade go red that's green? Wrecked. Look at this Ivy wreck. It's like a joke. They do it every fucking time. Oh, did you buy AMC calls? I tried to tell you, bro. It's not the day. I didn't want to say that though, cause oh shit, this is it. I've said that a few times, but this might be it. We held a support here, and we're not breaking through on this bar like I thought we would, and that's major volume. Nice, dude. That's what's up. Yeah. So every time Ivy spikes, so look at this call, this AMC $60 call that expires Friday, in 3 days. So it expires in, I'm sorry, yeah, 3 days. That's how far out of the money is 61.8 is where they're selling them. Well, the stock is trading at 57, so that's That's 12% out of the money in 2 days, right? For the stock, that's when they're selling their calls, and then they just short the stock, right? And then they just buy all their calls. So that is how market makers make money. Now, how they lose money is when you wait to buy your call, right? After all these suckers bought their calls, sometimes I'm a sucker here. I'll be honest with you guys. Sometimes I buy here, but I never buy here, almost never. After all these suckers buy their calls, you steal the market maker's money. So you buy that same call, and now they're going to let the IV run up again because they just sold. They don't care, right? And now you sell your call for profits halfway back up. So you don't be greedy. You don't look for that 1.8. You look for that 1.5, that 1.6. So for AMC, right, this one doesn't have enough time, so it's not a good example. But if we go to the if we go to the AMC trade page, let's go to the July 9th weeklies. So let's pull the 61 up and copy paste it over to your watch list. That'll let you pull it up into a chart, link this watch list to a separate chart. So when I go to my active traders, this one's linked purple. This watch list is purple. This one's linked red. This watch list is red. So if I click a red, it'll go to the red chart. If I click purple, it'll go to the purple chart. So I want to look at AMC, I'll click AMC. And then on the other side, I'll click the AMC call that I want to look at. So the AMC call I want to look at is the $60 call expiring on July 9th. So, holy shit, July 4th is coming up. That's cool. So what we're going to look at is how this call, which has much more time, traded today. So it started at 576. And right now it's trading at 4.5, meaning you could have bought 30% more of the position if you waited 4 hours. And that's the market maker's game every time a stock gaps up. So the problem that people have is they buy space one time, right? Space gaps up, they buy it that one time it gaps up, and it just keeps fucking running. And they make so much money. And now they just taught themselves to buy options when IV is high. So that's how people lose money. They get into this feed the dragon type loop of, oh, I did it once, I want to do it again. And they keep buying options when the relative implied volatility is way too high. So they're setting themselves up for a huge disadvantage. Why? Because the big money sold those calls. They want to make money on them. So they're going to short the stock and drop the IV. So that won't happen every time. That'll happen probably 90% of the times. They'll short the stock and drop the IV when it gaps up. So I'm cool with missing that 10% of the time that it does a space thing and it just keeps running to get the 90% avoidance of buying at 5 to 5, 6 to 5, and then sitting there at 4.5. So space was a trade that went bad, right? So this morning I was doing a lot of micromanaging on the stream instructionals, trying to promote the stream, looking through my charts, and trading on my external brokerage. I don't trade through TD Ameritrade. I don't like TD Ameritrade. I just really like Thinkorswim. TD Ameritrade, garbage people. So I decided not to trade through them. But I do like their charting service. So, but that's separate. That's Thinkorswim. So yeah, don't fall for the market makers' traps. Realize how they're making their money, right? So once you conceptualize how the big money is making their money, you can identify arbitrage opportunities to trade around how they're profiting, because there's always going to be an opportunity. If they're buying and selling to make money, right? It doesn't matter which order, selling or buying or selling. You can do the inverse at an appropriate time and capture the inverse gains. So if they shorted it down, right, you can capture the rise back up. And the momentum shift with an option will make that small shift into a very large one. So as I was trying to demonstrate here on AMC, so we bottomed out, right? So we've held this support for quite a long time here. The volume's drying up, so this is actually going to shift bullish. And this option price now
we're gonna show you, which is pretty cool. You can synchronize your crosshairs. So at 10:54, this option price was trading at $5, right? And now at 11:30, it was trading at 4.7, right? And then at 1 p.m., even though if you look here, right? So what's going on? Why is it that this stock is lower here, right? But the option costs substantially more than when we're here? Well, because we lost IV. So implied volatility is the likelihood of a stock to go up or down. So that's how we've been trading. So as we trade in a consolidated state, the implied volatility goes down. So when a stock starts to bottom out, you're looking to enter, and then as it starts to change from being on the bottom side of this rectangle to the top, this call price will go right back to 4.8. So we just need the trajectory, right, to change from this to this again, right? So if you do this, right, that's the trend we want to see, and this is the trend we're seeing. So and that's how the options are being priced right now. So this is a good time to enter a scalp, right? Because the options probability is thinking that it's going to trade like this. Now, here, the options implied volatility is thinking it's going to trade like this. Up, down, up, right? Because it just went from up, down, up. So it's changing the probabilities. So even though we're coming into down here, right? So if you're looking at this call pricing, and this is especially true for AMC and all these really memey stocks where the market makers are just abusing selling options. So trajectory to the right, option price cheap. Trajectory down, option price cheap. Trajectory up, don't fucking buy. It's that simple, right? So now as we're trading throughout the day, this will continue to rise and the stock price will continue to rise, but it's going to have natural resistances based on the derivative chain alone. Why do I say that? Well, because all these people just bought these calls, and like, I don't like bag holding, so if I see this move from 4.5 all the way to 5.16, I'm probably going to take some profits. It'll slow things down. So the longer you stay in a downtrend, the harder it is to just immediately pop back out. You create more bag holders. But yeah, so as we've started talking here, we saw the IV bottom out, right? And then it hit 4.63, and now they're trading at almost 4.7. In this trajectory, within a couple minutes, you're going to see this zigzag line I have. I really like. It just follows the trend, so you'll always see it. But that'll show you as it starts to pop up, you'll kind of see the option price will trade with the zigzag trend. I don't like TD because one of my trades didn't go through and I lost $10,000, and they said that I agreed to the terms and services that so what happened was the trade, I put in a sell order, right? It then canceled the sell order, and it got caught in between the SEC and TD Ameritrade without canceling it. So now I called TD Ameritrade. This is a $10,000 trade. I called TD Ameritrade. I'm like, what the fuck, guys? This is a put. I need to sell it. It's not. I don't have the profits. Not saying it's in my account. Like, what the fuck? And I was very upset. This is when I was starting out trading, so I wasn't. I was not able to lose this money, and I did lose it. So that's my dilemma with TD Ameritrade. They said, hey, don't worry about it. It'll all work out. And I'm like, I don't feel like it's working out here, guys. Like, I had 10,000 in a position, said I sold it, and there's no profits in my account. So what happened was, at the end of the day, they sold it for 10% of what I had put my sell order in and what they said it was worth. So I ended up closing out a trade that I had confirmed a sell order at 10,000 for $1,000, and they said that I spent hours on the phone with them. I was like, I even threatened to pursue legal actions. They're like, go for it. So obviously I just said, fuck you guys, and now they don't get any of my money. But I still use Thinkorswim. It was nuts, dude. I've never, like, you would think that they would have some protection service of that, and they said, no, I'm sorry, only for stocks. And I was like, ah. Oh, what do you guys think of Indy? So it IPO'd. It went up to 12. Let's do some charting. I love semiconductors. They make so much money, dude. So I don't want you to use it. You don't want to really use an extension until you have up, down, up, which we don't have. We have a down, up, right? So I can't use an extension. So I can use a high to a low though, and get a fib ratio. So remember how I was mentioning that this is the danger zone from 23 to 0. Obviously, it's nice to buy in here, but if we break this, it's not a floor. Like there's no floor, right? So what you look for is, and what you'll see is as we break into here, it just spikes. Why? Because this is the safety zone, and then as we enter into this 61 to 78 range, it's going to be the exact opposite. It's going to spike down back into the danger zone. So with this, because it's a very new stock, it can't really do a correction, right? It doesn't have anything to really correct from, so it's hard to chart what you want to do. So I generally don't trade too often on IPO'd stocks, but yeah, I always like looking at them and making predictions. So this is trending on StockTwits. That's how I found it. This bar, the day volume is pretty high. So let's go to a 27-minute chart. That's funny. Touched the gap. Alright, let's do some predictions. What do you guys think? I guess the other thing I really think I should advocate is when you're trading options, you really shouldn't think of it like a make it rich overnight type thing, because that mindset really fucks people. They don't take profits when they should. They relate every trade to that one trade they saw on Wall Street Bets, right? And they want that, or that one day they had a really good return. And then they just get too greedy. Like, it happens really quick, guys. You'll go from like 2% gains a week to like 5% gains a week to like 30, back to like 2. Then you'll have some losses, and then you'll reevaluate everything, and you'll check your profits for the month. You'll be up a couple percent. And then about a year down the road, you'll finally figure out that, like, all it takes is just a little bit of discipline, and you'll make so much money. You'll lock in profits, and instead of resetting every couple months, you'll just continue to grow. And that's the beauty about money, is the more you have it, the easier it becomes to make. At least that's what I've found. It's like, fuck, I fucked up a position. Okay, I'll just buy more. Whereas when I was first starting trading, it's like, I have all my money in this one position. Didn't go well. Now I have half of the money I used to have, right? Like, that's not a good feeling. So try to avoid that at all costs by managing your position size, limiting your risk by diversifying which options you actually go into, trading both swings and scalps, and then having strict rules, stop losses, profit takes, and entry exit rules. So incremental entering. If it goes 50%, you automatically exit 50% down. If it goes 100% up, you sell half automatically. It's just like little things. So, call pricing here. Why is it substantially higher than here? Well, at this one, the implied volatility as you're rising or falling is actually higher than when you're trading sideways. So the implied volatility while AMC drops, right, is higher than while it goes sideways because it's anticipating AMC will sharp correct like this, right? Now, why does it anticipate this? Because it should be sharp correcting like this. This is bearish trading. And they're pushing their limits here. So this is why bears get caught. They're too greedy. So this will lower the price on this call substantially, which will create more derivative trading. It'll create a buying opportunity for bears. The smart bears will exit, right? So this stock is trading as if it's here on the option pricing, right? It's trading at the $5 mark, which is almost 58. Now, at the morning, it was $6. That's just a substantial difference on a 2-week out position. And I'm trying to illustrate how you would visualize what options are priced based on. It's like a little rocket ship. The probability of being in the money is like the combination of your gas tank and the type of fuel you use, right? If you're using the Elon Musk cream of the crop fuel, right, and your gas tank's full and you're just flying, your implied volatility is going to be really high. It's on this trajectory that you're going to just go forever, right? And that's like this AMC here. This is where we made millionaires and lost millionaires in days because the implied volatility shift made optionaires millionaires and then took it all away because they kept doubling down. And when you're trading here, it doesn't shift. The volatility doesn't just shift so you can't enter swings until we break out of this entire channel. So once we break out of this range, the implied volatility will drop significantly. Why? Because if I'm a market maker selling shares, and this stock's just been bouncing up and down, right? It's very risky. It's not trading in a tight little channel, right? And it's going both higher and lower. It's not easy for me to say, hey, this call will expire out of the money, I'll make money, right? It's hard for me to say that. So the pricing is based on that, and the combination of momentum and price action. So that's why I don't touch AMC right now, because it's just, you're paying 10% of the stock price for 100 shares to buy a call that's 10% out of the money. It's like, what are you doing? Brett, that's the thing I was trying to say earlier, man. If a position goes down 50%, it's going to go down further. I can almost guarantee it. It means your trajectory is off. It means you bought when the trajectory was way different than it is, right? So we bought those knowing it was a scalp. They went in our way significantly. There was many opportunities to stay profitable on that trade. So what you need to do is identify how you'll stay profitable the next time you have a call go 100 to 200% in the money, because, or 100 or 200% gains, because to lose that is an unforced error. So you just want to limit that. So it happens to everyone, man, and that's part of the learning process. I lost about 70K before I made real money. It wasn't overnight. It wasn't like a day thing. No, it was just like a year of trading. Plus I blew my account, and then I made it all back times a lot. So the takeaway isn't, hey, you fucked up. No, it's, hey, this is a really valuable learning lesson. Like, in the future, there's so many different ways. I've already illustrated just a few of the simple ones on how you can lock in profits and still leave potential for more and limit your risk, right? So you need to find a way to do that, and the next time this happens, make sure you do that. Don't even think twice about the fact you're limiting your potential gains. Just do it, brick by brick yourself, and then eventually, once you are experienced in trading options, you can start straying away from your rules in unique situations. But until you know when it's okay to not listen to your rules, you should really follow some common sense rules like stop loss, profit takes, when to uh, exit, when to enter, just little things like that. So yeah, so it happens, man. You did awesome. You did an awesome position, um, and you know what? You'll have another awesome position. You'll make all that money back. So don't worry about the loss. Think about how this won't happen again. Why do I have an upside down ratio here? So yeah, so that's the mindset that you need to get into sooner than later. So that was my biggest mistake trading is I did the same thing you did, um, and I did it on a weekly basis. I was pretty good at entering, and I was really fucking bad at exiting. Like, I was like really bad at exiting. I diamond handed everything. I was like, I'm gonna diamond hand it. Fuck it. I had 100% profits. I'm gonna diamond hand it. It'll go to 1,000. You know, and you know, 1 out of every 20 times it does, but that 1,000% gain doesn't equate to the losses of the 19 times that it doesn't. So it takes a while to break that trading mentality of get rich quick, and to get into getting rich safe or quicker, which is realistic, right? So blowing your account to a 50% loss and 100% gain aren't the same thing. After a 50% loss, it's no longer the same thing, right? So a 75% loss is not equivalent to a hundred and something. It's like more like 150% gain to equate to a 75% loss. A 90% loss of your portfolio is equivalent to like almost 1,000% gain to get back to where you were. So think about 50% as kind of the number you never want to go below. So Brett, you should know on the day of the scalp, right? If you decide to swing that into the next day, you should know that there's a massive potential for this to go down, right? It's a scalp. You didn't enter this trade as a swing. You bought it when the IV was high. So I wanted to swing mine too. So what I did is I sold calls on top of it. Now, I still lost a little bit of money today on the space trades, but I didn't lose much. Why? Because I sold a bunch of calls, and then the calls that I did have left were all runners. So I sold to open calls on top of the long positions I had, which creates a theta neutral position that also locks in profits. And then on top of that, I had already sold over half of my position at almost a 90% profit. So those two things combined, looking back from yesterday to today, I made money on the space trade. And I would have lost a lot of money if I didn't do a couple small things to secure profits. Man, something's going on with the market. I'm not sure where all the meme stocks money's going, but they're not going into any of the stocks I have here. Usually it's like if all of these are massively down like they are and the rest of the market's up, you would assume that the volume just shifted to a different play. But I've checked everything. I've checked stock twits, I've checked Twitter. Nothing's trending. Yeah, it's tough. I'm sorry, man. I'll try to be more clear on my stop losses and everything. I forget that a lot of traders don't manage positions because they trade stocks, but these aren't stocks. So I'll be much more clear on my stop losses to try to help so this doesn't happen to someone else down the road. But between the 10 people in here right now and me, uh, you guys, this is not it's not the hardest thing in the world. You guys got this. Just keep your rules safe. Brick by brick your way to financial independence. It's develop a trading skill, learn how to enter, predict your stocks all day long. That's all I did for almost a year. Is I just watched fucking stocks and I tracked where they'd go and I guessed where they'd be. And you know what? At the start, I wasn't very good. In fact, I was pretty bad. And now I would say I'm very good at technical analysis, uh, and that's largely just out of pure will. I just wanted to trade. I just wanted money. I didn't want to work for someone else. It's the only place in the world where it doesn't matter, right? Like, you don't have to be a doctor to make 300K. You don't have to. It doesn't matter if you're male, female, race. It's just blind and it's beautiful. It's the most competitive thing in the world too, and I'm a very competitive person. So along those lines, it's very easy for me to fall in love with it. But if you put in the time, all I'm saying is you will absolutely be able to become a profitable trader. Just evaluate every trade you make at the end of the day. If you lost money, I know it sucks to lose money, and I know it sucks to open up your account when you lost money. It's like, fuck, I don't want to look at that, you know? No, you need to. You need to go back through there, dig into your trades, look at the charts, see where it went wrong, and make a note to yourself. Write it down on a fucking piece of paper. Say, this is where I fucked up. I will not fuck up like this again, right? And you know what? You might, but if you do, you write it down on a piece of paper again. And like it's just these little things like that. It's like you're forcing yourself to listen to yourself, right? When you make a mistake and you don't acknowledge it by addressing it, or you know what I mean, you kind of just brush it under the rug and say next week's a new week. If you don't acknowledge that mistake, you'll learn nothing from it, and you'll just continue to make the same mistake like I did for over a year. It took me, you know, wanting to buy a house and realizing like, oh fuck, I worked a lot this year, can't have a house, right? To to realize that, hey, I need to go back through on every single trade because I'm pretty good at entering and figure out where my mistakes are. So I made some rules, and it's that simple. You're there, Brett. So the other thing I want to show you real quick, just so we don't lose faith in squeezing, is squeezes work opposite. So essentially, you'll see a squeeze indicator, right? And that's saying, hey, this is getting really tight here. Like the bears and the bulls don't have much room to breathe, so only one side's gonna win, right? The trades are too tight. There's only it breaks the law of non-contradiction, right? Uh, the stock can't be both bullish and bearish for forever. And as the patterns get tighter and tighter, the law of non-contradiction states only one can win. So what you'll see, right, it's getting tighter and tighter in this little channel. And as it gets tight for long enough, boom, it pops these little red dots. That's a squeeze indicator. Alone is not going to help with much. So I stacked it under a couple other indicators, but I like looking at these little visual red dots. It doesn't tell you which way it'll move, but it's pretty good at telling you, hey, this stock is going to move, right? And once you identify that this stock's going to move, you use other technicals to figure out which way. So let's go to like a big chart, like a day chart. I want to show you these squeeze indicators. So see how the stock's trading in this little trend from here to here? Like, does that make sense on why the thesis is too tight? The stock's too volatile to be trading in this small of a range, right? So it creates this little squeeze indicator. And what happens is it's short squeezing all of the shorts at this point, and boom, it pops us up, right? So let's look at a different one though. Let's look at this one. So it's saying we're in a squeeze, right, for this whole period of time. What's happening? Okay. So, boom, we entered our squeeze, right? And we're squeezing up here. Now, this is what I want to show you. Squeezes generally break down the opposite way that they're going to go. So, this is what I want in AMC, and this is why I want AMC to go down. So, as it breaks down, it starts another squeeze. All right? So, hit this high, breaks down, holds a support though, right? And now it's trading in an even tighter channel, lower than it was before. Now, this time, the bulls have the advantage, and boom, stocks go up. And let me show you the best stock in the world to use a squeeze indicator on. So, Tesla is probably my favorite squeeze stock of all of the stocks. I make a lot of money on Tesla, but it's very rare that I trade Tesla because it's very high implied volatility because it squeezes a lot. So, what you see though is probably the most beautiful squeeze indicator chart you'll ever see in your life. So we squeezed from $35 all the way up to $75, right? Oh, we got a squeeze indicator at the top here. Boom, back down. Oh, shorts are winning. Shorts are winning. Hit the squeeze. Short. So this is what I mean by they break opposite. So shorts are winning. We're at the bottom of this channel. So we broke out of our trading channel, which we'll draw in a little box for you. So this is the squeeze channel, right? Every time we break to the high side, it exits the squeeze down. So we're still in this channel. Now here's what we're looking for an entry, at least what I look for when I enter into squeeze trades. I look for a confirmed bearish break after multiple squeeze indicators have been fired on many time frames. So the confirmed bearish break of this channel, right? So we went from in December of 2018, it went from 75 to June 3rd of 37. It lost half of its value, right? That's a huge move. And then the squeeze indicator hit. And then within the same amount of time, that stock went from $35 to $200. That is shorts buying back shares. It's the only reason that went up. Now, what does this do? So, this is the first big squeeze, right? 75 to 150. Now, this creates the best opportunity for a bearish trader that they'll find in a long time. So they all start shorting the stock here. This is where things get fun. Squeezes happen in multiples of 2. So squeeze here, right? And then the shorts start winning again. But we held this support. So multiple, so holds the support, boom, pops right back up. Within 2 months, we're trading at a high. So now we're looking for a day chart because the stock's so volatile now that a weak squeeze isn't going to happen. So we're looking at a day chart, and here's what I just want to show you. So every time a squeeze indicator happens, this stock makes massive moves. Boom, right? So it just went from 270 to 500, and that's in the course of 2 months, 1 month, August 8th. Less than a month. In through 2 trading weeks, this stock went from 270 to 500. So indicators are very powerful, but here's the problem, right? That same squeeze indicator, oh no, it's a squeeze, let's get in, right? If you go long here, you just bought at 500, and now the bears are winning. This is the longs getting squeezed, right? So everyone long is selling their positions. Now, it's not going to have a drastic effect like a short being squeezed because there isn't infinite loss potential on a long position. So you can lose the entirety of what you paid, but you can't lose more than what you paid if you went long. Now, if you went short, you can lose infinite. So squeeze to the bottom, right? Boom, we hit another squeeze indicator. Boom. So squeezing down, and then we start trading, popping up, and we enter the same squeeze again. But this time, we entered it from a high to a low. It didn't come from the low to the high. So as you're entering the squeeze, if you're entering from a high to a low, generally it'll pop to the high. So let's take a look at AMC. Now, the reason I wanted to bring this up was because just yesterday, and I didn't mention this because I just didn't want to get into everything yesterday. Today I have a little more time. I'm not really actively trading, but the reason that I'm a little bearish on AMC is the same reason that I make a lot of money on Tesla. It's because I conflate AMC as trading similar to how Tesla traded. It's not trading in this meme stock hedge fund getting margin called fashion. Like, sure, that's a potential down the road, but this is trading in just a classic bull versus bear. Who's going to win? So this indicator popped off. Now, we just entered this squeeze from what? A low to a high. What don't we want? We don't want to enter a squeeze from a low to a high. Why? Because that's an indication that you'll probably jump down. So it's going to break up, right? Which I'll show you on a 4-hour because it already did this. This happened. So, there, that's better. I can't see a damn thing. Let's see a little better. So we're entering this. So the first squeeze we saw was from, we entered it from a high to a low. Now what happened? It popped up, right? Boom, great. Now we sold off, and we actually sold off a little further than I wanted us to. So that's okay though. So we entered back into the squeeze on June 22nd, so a week ago. Now, what's the difference? This time it came from a high to a low as it entered, right? So this one comes from, I'm sorry, it came from a low to a high as it entered. So this one came from a high to a low, right? And this is indication to me that it's going to pop up. Now this one, it's coming from a low to a high. So this is saying that the bears are winning, or the bulls are winning. But essentially, the bulls didn't have any right to be winning. We didn't squeeze any short trader here. They just gave him a better buying opportunity. We didn't have enough momentum to break through that. So what happened is it entered the squeeze from the bottom. It pops up, right? And it comes right back down. Now, what you're looking for is a breakdown and a retesting of the squeeze. So we're seeing so it entered the squeeze. A 1 hour will show that it exited, or 2 hour. Cool. So yeah, exactly. So enters the squeeze from the bottom, pops up, enters it from the top, it's gonna pop down. And now these are squeezing, but it's not the move you want. The move you want is a confirmed break of a support. So this support needs to be broken, and we need to hold here. If we hold in this 50 range, this thing will fly to 70. Realistically, what will happen is we'll squeeze down to 44 to 48, and then it will rocket, but it'll be over a course of maybe 2 weeks that it takes to get back to the 60s. But when we test it, we'll have the whole world will be long, essentially. It'll go much further. And that's how a squeeze takes place. It doesn't matter whether long or short's being squeezed, it's just the battle between the two. I didn't fucking work out. Here to here is what I wanted. It just did not happen. I just don't understand that. How does the first 2 hours of trading of the day look like this, and then the second 4 hours go down? Like, it's such a buying opportunity. I checked the news cycle 4 times. Nothing bad. So, yeah, I think this is an example of entering a squeeze from exactly how we want to. So we're breaking down, right? We're going to re-enter the squeeze that we entered here. So this squeeze is indicated because we've been trading in this channel that I drew for a while. So it broke up, and then we broke down, right? And it's going to re-enter this squeeze in just a minute here. Or rather, the next 2 hour bar will indicate another squeeze is entered. And what I anticipate happening is a sharp push up. So it'll be bigger than the push down considerably, because the loss potential on a short's infinite. And that's how I trade the meme stocks, which coincides very well with trading options, because you want to buy an option when the IV is low, or a call, and squeezes tend to break down before they break up, which is the perfect entry. So buying the dip on a stock is really good when you know which dip to buy. So a bad example of a dip was this morning, right? Like, I bought this dip here, and it didn't work out for me. I bought this dip here because we held at the 2 hour mark with this much crazy volume, and I anticipated that we would easily retest 35. In fact, we ended up going all the way down to 33, so I had to completely redraw my Elliott wave, and then I realized that my Elliott wave was off because I wasn't seeing the extended hours. So I redrew my Elliott wave, and I found that the entry should have actually not been in this gold box. It should have been at this little circle down here that I drew. That's 1 times the length of A.
So lo and behold, oh, that one confirmed with some bias, right? So 2 hours later, it did confirm. So at this point, we're now going to re-enter that same indicator from here, right? And as soon as that happens, we now have the right momentum shift to proceed. Because plug was $60 at in February, this doesn't need to break down as far as AMC does to squeeze higher, if that makes sense. So this should do it. I'm very bullish on plug today. That's a very good example of a stock I think will enter a squeeze indicator in the next 2 hours, and then from there, it should pop up. So looking at it, maybe a 30-minute will show the squeeze. Okay, cool. This one's got plenty. So yeah, look at this little consolidation channel. Squeezed. So what we want is a squeeze that brings us down, right? So squeezed brought us down, and then we re-entered the squeeze from the bottom. Boom. So squeeze, right? It brought us down, right? And then we re-entered the squeeze. This is a bad example. Take it back. It didn't pop an indicator here because it happened so quick. Maybe if I go to a 45, it'll show it. So great. So squeeze, right? Squeezing. We pop down. Now, as we re-enter this squeeze, this is where people make money. So squeeze down, way below our major supports. We re-enter this squeezed, and then, boom, this is where I took my trade. And I closed those, the runners today, I closed for 200% profit. I could have closed them for 3 at one point, but I was greedy. Now, I re-entered here with one incremental position. So I actually am still down 5% on this position that I entered. But I'm up on the day. So plug's been a good trade for me, even though it was a little bit of a mischart on my Elliott wave. And yeah, so I think that this should be real good. So entered the squeeze, blah, 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 pop. Enter the squeeze, pop. Breaks down, re-enters the squeeze, pop. So if you're breaking up and you enter a squeeze, let me show you an example. Breaking up, entering a squeeze, not a good thing. You're gonna go down. Breaked way down, right? Breaking up. Nope, breaking down, right? So you broke down, this is what we want. And then it re-enters that same squeeze from the bottom, which creates more bulls. And then these bulls squeeze the shorts, pops up. So to the high, right? So it's squeezing opposite of how you want it to, indicating I'm gonna be a long squeeze. Boom, longs go down. So again, these aren't like 100% things, but it's the combination of as many confirmation biases as you can get, and that's how you make the highest success rate trades you can. So that's the squeeze indicator. This study is called a TTM squeeze. Oh, it's not showing my study set. Alright, I just posted my study set on Twitter. So that one I messed with a little bit, so let me see if I can figure out. I did it so long ago, because I didn't like everything else.
it had so much extra crap on it that all I wanted was the little dots. So I deleted everything but the little dots. That's how I did it. So open the TTM squeeze, edit it, delete everything but the dots. If you get it wrong, just reset it to factory default and try again until you delete everything but the dots. Once you get the dots, add the dots to a stochastic momentum or an RVI or a RSI. Those are all similar. They're all telling you overbought or oversold. So I like stochastic because it's more so tells me about momentum shifts, whereas like a RSI will only tell you if it's overbought or oversold. So as an options trader, you really want to pay attention to momentum more than price action. So as you can see, right, momentum on plug here, it shifted as it crossed this blue line cross, which happened in after hours. It starts to shift, and then as this blue line breaks this overbought, it's going down, so the white will follow. And now momentum shift to the other way would be breaking into the zero to the oversold range, right, with, and then having this blue line cross the white line. So it's similar. It's the same thing as an RSI. It tells you overbought, oversold. The difference is it tells you momentum. Hey, enjoy your travels, Will. I appreciate you stopping by, man. And I will absolutely build a list of trades that are focused on small accounts that are going to be. So I've been kind of just based off the 10 people I get in here. Yeah. See you, bro. I've been trying to put together in my mind how I want to go about everything because there's so much information. And one of the problems I'm realizing is a lot of the trades I take are very expensive. So I think I'm going to start breaking them down into 2 options for each trade. One would be an expensive option, which is going to be riskier. And the other would be like a debit spread, which will limit the costs. So I think that that'll be good for a lot of people in the channel, or future people, if it ever happens. Damn. Yeah, so I think that I could cut the cost of all the trades by about 40% if I open them as debit spreads, but it'll define your max gains and your in exchange for lowering the cost and making it theta neutral. But then again, most of my trades aren't something I'm looking for a max gain. Make sure space I was, but like plug, BlackBerry, AMC, all of not AMC, plug, BlackBerry, Corsair, all of these things I'm looking for a solid swing. I'm not looking for a millionaire maker stock in a day. So I think it might actually be better for me to do debit spreads, honestly. Fuck it. We broke some major supports. This just blows my mind that this is able to
Yeah, that's crazy. Well, this is ridiculously easy. That's why I play right side of green, by the way. It's hard to predict where this will go. It's not hard to predict where this will go. Or rather, this. So, hmm. I love looking back on successful trades. It's literally, it's like painting. Every single trade's like its own blank canvas, and there's so many different things you can do, and it's only up to you, right? And that's I think what I love about it. It's the freedom to go long or to go short or to sell calls or to buy to open calls. To it's just a beautiful, beautiful thing, and the creative aspect behind it is fantastic. So, um, we did hit 697. My anticipation was 700 if we break 660. I ended up selling those at 500% gain. Um, the runners. And like that's a pretty simple trade. I saw a squeeze form. I saw its breakdown, right? So squeeze is fired up here, right? And then we break down. Now we're still in the squeeze and we break down, right? Every time that you see something like this, it's good. Uh, so squeeze, it broke down, right? And as soon as it enters back into the upside, that's where you want to enter. So indicate squeeze, boom, oversold on the stochastic. Elliott wave just dipped into zero point 0.3, negative 0.36, which is a natural ratio. And then it didn't break this support. So all of those things are saying, hey, this is your buy. So you buy here, you're a genius, right? You're 5 days ahead of me. Now, I see this happening. I check my Tesla stock once a week. I see this happening over here. And this is where I entered my trade. Now, I kind of illustrated this one a little bit. So, bulls, bears, right? Only one can win. So, you looking for a breakdown, which we find. At the end of the tunnel thing here. It's getting so tight. What's happening? Alright, so end of the tunnel thing here, you're looking for that breakdown, which we see, right? It broke it to the bottom and then popped. So I was up like, I think like 50% when I decided to swing it, and then the next day I went up to 500. And then I should have taken this put, but I don't short Tesla. So I wanted to buy the 670 put that expired on Friday, and it went down to 671, so that would have been a pretty solid swing, or scalp rather, because I don't ever hold 0 days. And then, what else do I want to go over? So we squeezed, and boom, we pop right up, and now we just entered the squeeze at an all-time high. Not good. Boom, pop down. Now, as soon as the squeeze indicator fires over here with the stochastic reset, that becomes a major buy signal for a lot of traders. So I'm not sure how many people use the TTM squeeze indicator, but I remember when I first started trading, I watched some, I wish I remembered his name, it was like Simpler Trader or something, like John. But essentially, he just tried to sell me on all of his products through his YouTube videos, but he did give out the link to this TTM squeeze indicator. He didn't teach anything about trading options. He just essentially sold positions, and then his tech stuff, which is the exact opposite of what I want to do. I don't want to sell anything. I would rather just put out as good of informational content as I can, and in exchange, if I'm able to collect ad revenue, great. But like, shit, I just love trading. I'm like, I've been bored. I stopped working a few months ago, guys. So, here we are. I've honestly never seen my watch list this red. Like, everything. Fuck, I should have bearish today. So, Corsair. Squeezed. So, enter the squeeze indicator, right, from a high to a low. Boom, enter the squeeze again. So, let's examine. I appreciate that, Will. Yeah, I have no idea what's going on with that, Brett. So let's examine. So, essentially, this is Corsair. Now, it had this major squeeze indicator, right, for a whole trading week. And then it gaps down, and it pops back up, and it re-entered the same squeeze. That's what you want. This exact moment right here is, I wish I could develop something that could pick up this, right? Like, I want an alert system that'll just find stocks that do this. Now, same thing. Entered the squeeze, but we broke to the bottom, right? So we entered the squeeze, and it's the first one. So, boom, popping down. And now we squeeze for a long, long time. Another 5 trading days. And, boom, re-entered that same squeeze. So, this is a squeeze that's equivalent to this squeeze, right? The same price action occurred in these trading days. This squeeze is all the same. So, squeezed down, and now we're entering that same squeeze from the bottom. And that's what I like to see. So, as you'll see, popped up, entered this squeeze here, gap just down, pops, and we're entering a squeeze from the bottom.
And then for options, the only study you're going to want is RVI, Relative Volatility Index. Now, what does that mean? Well, it's telling you, strictly speaking, how options are priced, excluding a few other Greeks like theta and whatnot. So, assuming you're not trading a 0 day to expiration contract, because the probability, right, is determined by implied volatility and time in momentum, right? So if there's no time left, it doesn't matter whether the RVI is low. It's not going to get there. So assuming you have time, what you're looking for on trading options is volatility dips. So the only indicator you want on your option charting, at least what I've found, is RVI, Relative Volatility Index. And I cannot stress how many times this indicator alone has told me to sell, and it's made me money from selling. You just sell calls when RVI is high. It's that simple. You'll be able to buy it back when the RVI dips. So, look, RVI spikes. If you sold the call here, you could buy it back, right? Oh shit, I didn't buy it back. It went all the way up here. Whatever. You still sold this call, right, for profit. Same thing. RVI spikes, and buy the same call. Now, we're getting into theta decay range. So theta starts kicking in at about 2 weeks till expiration. Oh no, we're not. This is an 820 contract. I take that all back. So theta is about 2 to 3 weeks is when you'll start noticing theta decay. Theta is the time decay. So as you run out of time, there's less likelihood of that contract expiring in the money. So your premium goes down. Now, don't worry about theta unless you're 2 weeks to expiration or less, because it's almost negligible. It's like 0.01 for forever until like 2 weeks, and then it's infinitely more and more until zero. So don't worry about theta if you're trading a couple months out. And then for the options, just simply sell when the RVI spikes. Like, if you're not confident in your stock and you picked up an option, take a look at the options trading thing. Go to like a 1 day so you can see the relative volatility for this call for a single day. Okay, so this is showing me the relative volatility for a single day on this call, which is what you want to see if you're scalping. So I'm scalping a position. I'm going to look at a single chart, and I'm looking for an RVI dip, and that'll coincide very nicely with a stochastic dip and a buying point in the stock. So when you have a entry plan, like an Elliott wave theory or whatever technical analysis you want to use, you predict where your entry will be, and then you take a look at your technicals, which are the underlying and the option. So when you're looking at them, you're checking the first thing you're checking is volumes. So I don't want to see increasing volume as the stock sells off, right? I don't want that. No, I want decreasing volume as the stock sells off. That tells me that this bearish bullshit's coming to an end. So volume number one. Number two, I'm going to take a look at the options trade. And this is all after I made my plan to enter here, right? Now, I make this plan. I check the volume, because let me turn off extended hours. So I make a trade plan in the morning. So we popped up, so then we go at A, B, C, right? It was really quick. It happened in an hour. And now that's my trade plan. And now within the hour of trading, let me show you what happens. So we jumped up. Now, really nice time to sell calls in the morning. This is when everyone buys their calls, and this is the irony in human nature, is no one thinks things through. Everyone wants to buy a call on a hot stock, but calls on hot stocks aren't how you make money. No, it's the exact opposite. You sell calls on hot stocks. And the reasoning for that is that's how people with more money than you make money. And you don't fight people with more money than you. It's very commonsensical. Okay, so back to the trade.
So if I'm looking at this Corsair trade in the morning, let's go to a smaller time frame, like a 6 minute, because that's generally what I trade off of. Now, in Corsair, boom, look at this gap down, and then we had this big push up, right? We went all the way to 33.8, and we rejected. So now I'm like, oh, what the fuck is that? So I pulled out a little bit, and I take a look at this, and I see A, B, C. So at this point, now I feel comfortable planning a trade. So I recognize my Elliott wave, I plan my entry, and now if it happens to get into my entry zone, this isn't a definitive thing. This is me wanting to take the best statistical trade I can, so I'm not going to take a trade unless I think I have a comprehensive understanding of where the stock's going to go. So to confirm I have a comprehensive understanding, I make sure it lines up with my Elliott wave theory. So stock goes down into the buy zone, right? Now, we're in this buy zone. I'm taking a look at volume. I want the volume to dry up. So you see in the beginning of the day, we had this bullish push up and then just massive sell pressure, right? I want this to dry the fuck up. So dries up, more sell pressure comes. Now, I entered over here. This was my entry. I shouldn't have entered over here. I should have entered over here. It would have been, a little bit cheaper. But the point is, at both of these times, the RVI is going to be in the blue. The stock is going to be correcting from a gap, right? And it's going to line up with my technical analysis, which I did ahead of time. So unless I have that confirmation bias, I'm not taking the trade. There's so many trades in this world, there's no reason to take one unless you think you know what it's going to do. And to ensure that you think you know what it's going to do, you plan it, right? So ahead of time, I create a little alert. It goes off. I take a look, and hey, it did what I wanted it to do, and I enter into the trade. And that's how I would break down my trading strategies for all levels of trading, whether that be a scalp in the morning or a swing in the afternoon. And then on top of that, the last thing is you just plan around what the market makers are doing. So it's almost like clockwork what the market makers do. So every single day, people buy calls in the morning as soon as the stock opens. And I just don't understand it. It just doesn't make sense to me. Every day they do this, right? And let's go to like a 30-minute chart with some rollover devs. It's cool. So I would say, unless the stock gaps down. Oh, this is the week that we went from. Look at this. This is the day that I made like $900,000. We went from 8 to 35 on option pricing, and I had like thousands of AMC calls. It was a beautiful day, and the next day I lost like $800,000. It was not so beautiful. But so from here, you're looking at your RVI, and so this is my AMC call. I'm looking at AMC. Now, we gapped up in the morning, so I want to sell a call. I don't want to buy a call. Everyone bought calls here because everyone went in on the hype. Let me zoom into today so we can actually see. Everyone went in on this hype that we were going to break into 70 because we gapped up, right? And that's, to me, just a very simple market maker move. Release your short selling pressure, give them some false hope, and then short the fuck out of the stock after they buy all these calls. Now, they're selling calls that are like 10 or 20% of the cost of the shares. So they're making such absurd amounts of money that I don't see this pattern breaking anytime soon. They're going to sell calls in the morning and then let the RV relative volatility drop and then buy to close their calls. And then they'll decide on Thursday night if they want to be bullish or bearish based on whether there's more premiums in out-of-money puts or out-of-money calls. So the market makers can kind of determine which range the stock will close in. So if I'm selling calls and puts, I'm collecting money from the premium, right? So if I'm buying a call, I'm paying for it, and I'm paying someone. So the market maker's taking my money. Now, if I'm buying an out-of-the-money call, right, he doesn't want that call to expire in the money. He wants it to go worthless. Or she, it could be a she. So they want it to go worthless. And now here's the other thing, though. They're also selling puts. So if there's more out of the money call premium, what you'll find is that the stock generally will close to the put side, and vice versa. Vice versa. On Fridays, if there's more out of the money put premium, the call will close to the call. The stock will close to the call side. So if AMC has $100 million in out of the money puts available expiring that day, and $200 million in out of the money calls, you can bet your ass that that Friday will be bearish. So these are simple, comprehensive things on understanding how other traders are trading and making their money. So that way I can develop a trading strategy that allows me to find arbitrage opportunities within theirs. So to put that into perspective, on Fridays, the market makers for the past few weeks, I check on Thursday whether there's more calls or puts in the money. And then on Friday afternoon, at the end of the day, if I confirm my thesis of, hey, it's going to expire opposite of the side with more out of the money premium. So it's going to close opposite of the side with more out of the money premium. So if that thesis, right, is confirmed, so I get some confirmation bias by the end of the day, then it tells me that I should go long on that Friday. Why? Because that is the moment in time where you will beat the market makers. They're collecting the positions they sold to open, right? So they're collecting all of that money on it, meaning they don't care about the implied volatility. So they're trying to lock it into a range, and in doing so, they're destroying the cost of calls for the next couple weeks out. So that won't last, because on Mondays, almost every time it gaps back up. Why does it gap back up on Mondays? So if they short the stock on Wednesday, Thursday, right? And then Friday they lock it into a range. Now, they just collected a fuckload of money. So much, like absurd amounts of money. I'm telling you, it's absurd. The amount of money people are making on selling premium for AMC and all of these stocks it's ludicrous. You're making 100% gains in premiums a year by selling 10% out of the money positions weekly, right? That's absurd. It's unheard of. So they're collecting their money on the Fridays, right? So if there's more calls expiring in the money or out of the money, right? They want to keep all of that premium. So they're going to tank the stock intentionally. And then this will bring the stock down, so you enter there. And now here's the thing. They want to make money again on premiums. So what do? They, on Monday morning, they don't short the stock. They go long. So they give the apes hope. And now Monday morning comes along. They're not shorting. There's no sell pressure on the stock. The stock starts to rise. The call pricing all flies, right? They're selling the calls. So rinse, repeat. Come Wednesday, they short the stock. Friday, they determine whether it needs to close bullish or bearish. Monday, they go and release their short pressure until Wednesday. Or I guess it was today, because we touched a high today. They shorted today. Ah, thanks. I appreciate that. Is it Mamoru? I'm going to go with Chiba. Chiba. But yeah, it's essentially you're looking for mismatches in the stories. So there's the day story, the week story, the year story, the 5-year story. You're looking for moments of discrepancies, and one of those happens to be very simple right now, and that is selling calls at open and buying them at the end of the day or midway through the day. If you buy your calls at open, it's like almost 90% of the time you're going to lose money right now in the current market pattern, is what I've found. So to avoid that, I just pretty much stopped buying calls at open, and I pretty much only buy large positions on Friday afternoons. Why? Because it's just been unbelievably good to me going long on Friday afternoon. So we're in a little interesting spot. So when you zoom into a smaller time frame chart, it'll show you more of the mismatches that we're seeing. So we're actually trading above the bearish trend line, which we broke yesterday, and that's why I anticipated we'd go down, which we did. So today when we gapped up, I also anticipated we'd go down. Yesterday my close price was 56.86. It looks like that's going to come to fruition today. I'm anticipating we'll dip down and then close back right around here. That isn't a buying opportunity though, because all of the money is in out of the money calls right now. So market makers are going to continue to bring us down. And this is why I think Monday would be a pretty good estimate for when our next leg up could be. So market makers just made an absurd amount of money. They're going to continue to bring the stock down to make sure that they don't have to pay for any of those calls. So they collected all this money for the calls, and if they are exercised, the market makers lose money. So to avoid being exercised on the absurd amount of calls they sold today, so 331,000 calls were sold today, and 149,000 puts were sold today. So when you put that into perspective, you can essentially, just by looking at the delta, you can also determine whether they're in the money, out of the money. So anything with a delta of 81 to 100 is very in the money. Anything with a delta of 0 to 20 is very far out of the money. So what does that mean? That means that there's 120,000 people right now with extremely far out of the money option positions. Now, the market makers are not going to let that, unless by some means there's more put money in the next couple days, which won't happen. The market makers won't let these people get out of their positions. They will ensure that all of these expire worthless. So my trading strategy has been revolved around what people with more money than me are doing and how I can squeeze in without getting crushed by their massive wake, right? So you're always going to want to look at stuff like this. This is your call probabilities. It's showing us that we have a 100% chance of anything from 42 to expire in the money for the most part. For this, and this is all the expirations, but you can limit it to whatever series you want. So if I wanted to just see this weeklies, I would pull up just this, and it's going to show me the puts and the call probabilities. So it's almost 100% chance that a $31 call ends in the money, and that stays to 90% all the way up to 47. So this is going to lock in a range, right? So 47 is essentially the lowest range that the market makers will anticipate this stock possibly moving in the next 3 days. And this can be broken, but it takes an absurd amount of money. Opinion on Sophie calls. Let me take a look at Sophie. But let me finish this real quick. So with your puts, it's saying that your probability of being in the money on a 65. So that's going to be your range, right? Your expected range. And this is what the market makers are saying. Hey, it's not going to move more than this. If it does, it's possible. It just takes a lot of money. So here's what you'll see is whatever side has more out of the money calls, almost always the stock will close to the opposite. So if there's more calls premium to be collected, it will close on Friday to the put side. So you're looking for a Thursday. You're going to check this, and you're going to take a look at how many calls and how many puts are in the money and out of the money. You can tell that by the delta. And then you're going to take a look at the volume and essentially figure out how much money there is to be made by the market makers in letting the stock go higher on Friday or lower. And then realize that the market makers aren't going to let it go to the side that nets them less. So in order to do that, they have to short the stock, though, which means for them to keep making money, and then the following Monday they have to take the short off. So there's very few traders that I think have figured it out, but it's pretty funny. If you buy a call on Friday afternoon on a meme stock, it's almost always profitable on Monday morning. And let me show you that on. Well, let me pull up Sophie real good. So Sophie is a SPAC company, and they don't do much yet, but they have really good stuff in the works. And I believe, if I'm not mistaken, Sophie is made by Chamat, I think his name is. Chamat? Yeah, it is. So he backed it. So So almost every SPAC that he's backed has gone parabolic. So from that standpoint alone, this stock has not gone parabolic, which makes it, from a DD perspective, like if someone's bought into like or backed, what six SPACs and all six of them went parabolic, but the seventh didn't. Uh, you might want to take a look. So I think that's what a lot of traders were looking at. So we opened at 10. In December, we hit 30 and we crashed all the way back to 13. So this is a complete Elliott wave. So this is a 1, and that's a 2, and I'm lost. I gotta find a better. Oh, here it is. Sorry, it's a little weird one. So, the reason I'm doing this isn't so much to teach you guys Elliott wave theory, even though it is a goal of mine. It's more so for future reference, because once I do this, I then have it forever. Can you? There you go. A, B. So it actually corrected twice here. So this is allowed in the Elliott wave theory. So and then from here, that should be our low. If this is our, yep, okay, cool. So this has got to be our low. This can't be invalidated. And now this would start wave 3 would be here. So this would be the start of wave 3. And we just saw wave 1. So 3 will have 5 components. And we have just finished wave 1 in wave 3. So this is going to look like 1, 2. So when we zoom into 2, so 1 needs 5, right? So 3 starts from here, right? Is what we're determining. So 1, 1, 2, 3, 4, 5. Cool. Now, A, B, C. So what we're looking for is confirmation bias to confirm that we are indeed in my Elliott wave theory. So how would we do that? So we would chart our A to get our high to low. So we A, B, C. And then this is the finish of, so A. Now, for anyone who's been following, they'll be able to tell you A is the high to low from the end of a wave to a correction. So high to low. Cool. Now, B is going to be 50 to 78% fib ratio of A. So from high to low. And now we're looking for the 50 to the 78%. Now this will be a bull trap. Now what do we see? Confirmation. Now here is where we want to enter. It's going to be here. So we actually dipped much further than I thought we would, but that's okay. So what makes this okay is holding here, this line. This would invalidate us. So, even though we went below my entry zone, this actually does look to be bullish. So my expected entry zone's right here. So obviously it's going to be plus minus a thing with how just the nature of stocks. So this should push us into what you're going to see though is okay. Fuck. So as you zoom in, you're gonna see 1, 2, 3, 4, 5. Cool. And then from here you'll see another ABC. And I'm sorry. So these are all different waves within other waves. And this will be 5. And then I'm looking for my trade. So I don't ever take a trade unless I think I understand the stock's movement. Now this, to me, is absurd. The amount of volume that Sophie just got these past few days is absolutely absurd for them to be going down. So I would say that this is one of the better buying opportunities that I didn't think I would trade, but probably will. What did we discuss earlier? The TTM squeeze indicator and the, more importantly, the applicative use of it. You don't want to use it all the time. You want to use it when you're coming from a high to a low. So coming from this high to the low, we just entered into a squeeze here, which means that, hey, buyers are ready to fucking go, and we're about to squeeze shorts. So my take is that we will see 24 within 1 week. 2 weeks. So that's how I will take my trade. I will look at the option trade. And we're going to adjust that to 22. And then I'm going to go to the trading tab, all products. I'm going to open the chain that I want to look at. So I want to look at the July 9th or 16th chain, and I'm looking at the 22 or the $24 call. Don't have a 24. So now I'm comparing the prices between 1 week and 3 weeks out, and I'm looking at the Greeks. The only really Greek that I like for pricing is Delta, because it tells me where you want to be. So remember I said the 22 range? The 23 range is actually where I want to be. So this is the position that I would trade if I was going to trade Sophie. So I'll copy it, and I'm going to copy a few, and then we're going to look at the price action of the specific option. So I'm copying the 23. It has a 30.3 delta, and it's near where I anticipate the stock will be in 2 weeks. So then I'm going to copy one with a 0.3 delta in 3 weeks. And I can already tell you, I'm just going to copy it just to show you, but I can already tell you I don't like this one. Oh, maybe I do. I'm sorry, I didn't even read it. It didn't make sense to me why the price was so much higher. It's a 22.5, not a 23. Okay, so I take that back. I will look at that one. And then one more would be the 35 in October. That's way too far out of the money for me, so I'm not going to look at that one. A final one doesn't even have... No, I'm not interested. So it comes down to these two chains and these two positions. And then I'm going to go over to my active trader or my charts tab. Pull up Sophie on the left, and then I'm going to click the calls that I want to look at. It'll pop it up on the right. And now I want to see how this is traded. So this thing on June 9th was 200% higher. than it was. Oh, shit. Shit, look at that. We messed that entry up. Damn. So I obviously didn't see this entry because I wasn't trading Sophie, but this stock is looking very bullish to me. But because we missed this initial entry here, we're not going to get that insane return. So rather than entering at this very moment, what I'll do is I will chart out Sophie into. So ooh. What happened today? Why did all of these stocks just drop? Like, I don't understand. So for the call for Sophie, though, we're looking at the $22.5 call expiring July 16th. It's trading at $1.25, so your break even would be $23.75. So by obviously, I'm not going to just blindly trade this. I mean, some people might, but not me. So what I'm going to do is I'm going to extend my chart into a day chart, and then I'm going to look at July 17th. And I'm going to put a timestamp. Why do I do this? Because I need to know what I expect. So I got my timestamp here. Do I think that this stock will be trading above 23.75? Do I think this stock will be trading above 73.25 in 14 trading days? 13. 14. I don't know math. It's very likely that this stock will be above 23.75 in 14 trading days is my consensus. So that doesn't seem like a bad position, but it's not wonderful. Wonderful would have been yesterday. And there's going to be major resistance. So oh, that's sorry, I was a little confused. So I gotta add another set of drawings to make this make sense to everyone. So, I was a little misleading on this. So, because we're in a bearish wave here, it's actually 5 waves, or 3 waves down, 2 waves up. So, 1 down, 2 up. So, 1 down, 2's up, 3's down. Three has to be bigger than 1 or 5. And now we'll see an upward correction, which would be opposite of what you normally see. So we normally see a correction down, right? So this one would be A up, so A, B down, B, C up, C. Now, that put us here, and we saw one more correction happen after that. So A, B, C. And now we're entering into wave 3, and we're finishing wave 1 of wave 3. So that being said, wave 2, or finishing wave 2 of wave 3. So this should be the start of an impulse wave, to be honest. Because we haven't seen an impulse wave, and all waves contain at least one impulse wave. It hasn't happened in wave 1. Wave 1 was pretty quick, so I'm expecting wave 3 will be very strong. So, I think it's actually going to correct one more time. So it'll be an A up, B down, C up. And that'll start wave 3. So wave 3 should start probably as it breaks this B, so here. And that's the last correction that we'll see will be here. So if A is up, and you're going to take the length of A. And then your confirmation, so activate this drawing, bring it over. Your confirmation will be opposite of how you'd normally do a retracement, which is normally high to low. You're going to go low to high. And you're expecting it to close in the 50 to the 78 range. So just pretend it's, yeah, you get it. Same, just upside down. So now we're expecting it to close in this range. So I'm going to remove this drawing, and I'm going to add a new one where this new correction should end. So if we see a move from here to here, that would confirm that we're going to see a start of wave 3, which should easily push us into the 28 range. Does that answer your question? Yeah, I did talk about space. So my answer to your question on Sophie would be it's up in the air because it's correcting so much, but technically it's on track to start a strong push into a large Elliott wave, which would be bullish, and this would be the very beginning of it, which is where you want to get in. So maybe scalps, maybe swings. Not sure. So that would mean, right, if we do play out how I think, that the entry would be in this range right here, and that your price point would be a push to 20. So this premium that we've been watching today, it's not trading very logically. I don't understand that. Maybe we just missed a lot. I'm looking at a day chart. I apologize. I was looking at a day chart. Okay, that makes way more sense. So yeah, so this premium will drop any second now. It's going to drop to the low of the day, 1.04 within moments, and then at that point in time, you're going to see a call spike. and that's when you would look. So remember, we're in this little bit of a bitchy downtrend. We're looking for decreasing volume, indication that the bulls will come out to play. Decreasing volume, boom, confirmation number 1. So, got that. Now, confirmation number 2. We want some big volume bars on the bullish side. Boom, big volume, bullish side, good. Now, confirmation 3, taking a look at the options tab over here. How's the volatility doing? So it's actually still pretty high, and the options aren't selling because of that. So people are buying a better chain because this one hasn't been adjusted. So this is the moment of truth, though. Does this stock break the low of the day and test into 1879? So this is at this very moment, you're on the fence about buying this position if you wanted to take it. You're not going to just blindly buy it, right? Because options are trajectories. It's not, you're buying a trajectory. You don't want to blindly buy trajectories. I guess that's a bad example, but you get the point. So for this, we're waiting here, and I think that it will break this support because of how long it's sitting on it. Generally speaking, the longer it touches a support or a resistance, the more likely it is to bust through it. So I'm anticipating a spike in volume here, which will bring us a dip down to 1878. So I'm going to put a note here, and that's my target entry. Because remember, this whole range is my entry zone, and it could shift pretty easily at any point. And with that in mind, you don't want to just throw all your money at the first trade, right? We just broke that support I was talking about, which is confirmation that we're going to go lower. So within seconds of me saying that, you'll see a dip down, right? There it is. So this is actually where I'm going to enter my first. I do like this. So that's the July 16th, $22.5 call at $1.07, and I'm going to pick up a few for my first entry, and then if it goes well, I'll pick up a few more. So I got two at 1.08. And I'm only going light on this trade just because I don't really know Sophie, and the longer I trade a stock, the heavier I'll go in. So I'll probably buy, I'd say like 40 contracts if this goes well, but nothing big. I used to trade a lot riskier, and then I lost a lot of money, and then I stopped doing that. But yeah, so as you can see, we broke that resistance, but now we're testing. We broke that support, and now we're testing it as a resistance. So that was why I waited to enter, was because it could still go even lower too. We have room to run, and this is the line I drew is the next support line. It's pretty easy to determine a support line as long as you're looking at a large enough sample of data. You can't look at a minute chart and determine a support line. But on an 18-minute chart, something solid like this, which is both a support and a resistance, so a resistance and then a support, right? That means it's going to have an impact. So on top of that, the simple 50-day moving average was touched. All of these things are bullish indicators. So for me, this was a very easy entry. But again, it's not a 100% thing. You're never going to be certain, so you don't blow your load in one shot. Enter incrementally, give yourself like 4 or 5 entries, and build your position over the course of a few hours rather than a minute, right? So
So great. Now we just confirmed this is a support. So we're going to see a push immediately back to 1932. So what you're going to do is you're going to do a second entry. And this time you're going to average up. So we just hit our second entry here, right? Now, I bought a lot more on the second entry than I did on my first entry. Why? Well, I want confirmation that I got it right before I just throw my money at something. So I anticipated we would break this support and that we would hold the next one. And I had confirmation on that. So as we did that, I entered once. And then as it confirmed itself, I bought a substantial position, right? So now I have 2 more entries left. But I didn't. So I always give myself 4 entries. I determine how much I'm going to use on the trade, and then my first entry is the smallest, and then from there I play it by ear. So I don't like averaging down, I like averaging up. So at this point, right, we're sitting here, we bought in at 1.08, it's already up to 1.1. We're feeling really good about this, but again, there's nothing saying that this won't break lower and touch this support, which is, this whole range is a good buy. You just don't want to buy it all up here is all I'm saying. And when I say it's a good buy, I mean it's a good buy in the bullish thesis, right? So there's also a bearish thesis right now, which is saying we'll break this support and invalidate everything and hit some new lows. I doubt that. The volume I saw here is more than what brought the stock from 11 to 30. So when I look at the day chart, I'm comparing the different volumes. So if I look at this volume, which brought the stock from $12 to $30, it doesn't compare to this volume, which brought the stock from 17 to 20. So this tells me that this is being shorted, most likely by whales who want to go long. So when you have enough money, you can kind of just force your will onto people. So I want to enter down here. I got to wait for it to get down here, right? Now, whale Joe Schmo, he can just say, fuck you guys, and put $100 million short, right? Now, when he does that, he takes another $100 million, goes long here, or he reverses his position. And obviously that's super risky, but they don't do that as simple as I just said it. They do that with option hedging. So they set up a desired target range and then use options to leverage it down, and then enter long and use options to hedge their position the whole time, while also collecting premium and capturing the stock move. Yeah, man, I majored in philosophy, so I have a very strong set of analytical reasoning skills. And on top of that, I have always just been a little bit intuitive. So yeah, oh damn, those selfies are flying. So yeah, so for the past few years, I decided I wanted to trade options, and there wasn't really a lot of info, so I kind of just learned everything on my own, I would say. Obviously, like, when I started, I looked at a couple videos, but they were all so bad, and like nothing in any sense that helped me. So that's kind of one of the reasons why I wanted to get into instructional content. Is I'm a little bit bored, and I think it would be a really big help to a lot of people if there was like a comprehensive series on what you need to know to get your feet wet, because there's a lot to learn, and it's counterintuitive to what you think it would be and how to be a successful options trader. You just do the opposite of what you think you want to do, and you'll generally do better than it'll take a while to fix the what you think you want to do part, but at the start, like, you always want to buy these calls when it opens, right? Like, holy shit, we gapped up, buy a call. No, it's not what you want to do. You want to buy a put at open, or sell a call rather, is what I like to do. So it's just those little things. So right, so we tested that support line I drew, and during this bar as we tested it, we broke it, but then we held above it. So this is bullish. This is the bullshit indicator, and it's gonna fly in a second. So this is a third entry for me, is right now. So I've entered once at 1.08, once at 1.1, and once at 1.15. I think I'll get it. Um, yeah, my tip for you is to pull up a chart, sit the fuck down, make stock predictions, write them down on the chart, and use whatever technical analysis you want to trade with, whether it be Fibonacci levels, Elliott wave theory, which is a combination of fib levels with a comprehensive logic-based rule system, or chart patterns, whatever it is. There's many different ways to do technical analysis. For instance, do you see how I knew that stock was going to both dip and then pop right there? That's because I've spent hundreds, probably 10,000 plus hours watching stocks, predicting how they're going to act. And when you do this, it's not something you can read in a book. It's something that takes a lot of time to build the intuition to understand why the stock's moving the way it's moving. Most people think stocks move from unilateral trading. In fact, that's the exact opposite of how stocks move. Stocks move from a combination of derivatives and the battle between bulls and bears. Derivatives are largely responsible for most stocks movements, though. And then the day-to-day fluctuation isn't selling. It's not just people selling. It's short selling, right? So when you can understand that, then you can kind of make a thesis on why it would go down and why it would go up at certain points. And then when you develop a thesis, you just wait to see how it plays out, right? So draw a box where you think it'll go, and if it lands in that box, awesome. You did really good. But if it doesn't land in that box, you go back and you figure out why. You reevaluate your thesis until eventually you're confident in your technical analysis. Once you become confident in your technical analysis, then it's as simple as following a set of rules, right? Like, I'm statistically good enough at entering positions where if I have a simple rule of selling half when I hit 100% and selling all of it if I drop to 50%, I make money. It's that simple because my technical analysis gives me like a 60 to 70% success rate. And that 60 to 70% success rate with those rules leads to massive gains, right? Whereas if you have that 70% success rate, but you don't have that sell when you're at 100% or sell when you're down to 50% rule, it'll be negative profits. You will burn your account. I promise you I did it. So that's my 2 cents. Oh yeah, that is volume. This is all volume. So what you're looking for is there's a bear trend today, right? It's bearish. Oh, so I'm looking on my entry. These are supports and resistance lines. This is the volume. This is my entry range, which I got from an Elliott wave theory. So what I did was I showed the after hour trading. This is it's all Thinkorswim, which I believe is free. It scared me, dude. I thought I had my camera on for a second. So again, broke, held, tested, broke, right? So these are all the different entries and why you enter incrementally into a position. There's nothing saying, so I still have one entry left. I've entered 2 small times, 1 big time. So I have about 50% of my buying power that I dedicated to this trade left to use with one more entry. And sure, I might break it into two, but I always kind of trade in fours. Um, so I took my first two entries relatively close to each other, anticipating a sharp move up. Because that didn't happen, I'm not going to just buy more right now. No, I didn't. It didn't play out how I wanted to. It's the opposite of confirmation bias. So I kind of just wait and chill, and then, you know what? If I need to adjust my position, I can with 50% buying power left on the same position, rather than throwing 100% in, right, and then seeing it drop to here and being like, fuck, right? Like that doesn't feel good. So how do you avoid that? Well, you never enter. Don't throw all your eggs in at one time. Everyone does that. They see this trade in the morning. They're like, I have $2,000. I'm going to put all $2,000 on it this second. And then a couple hours later, they have $1,000. So this is all Thinkorswim. I've customized my Thinkorswim a lot. I'm a very aesthetic person. I like aesthetics. I don't like green and red together. I think they look horrible. And I don't like looking at the horrendous antiquated charts that people have. So I kind of just made mine preferable. Jesus Christ, space is dipping to 46. Jesus. Well, I wish I saw that one. But yeah, so like I said, there is no 100% in trading. So it depends on your rules for when you're successful and when you're unsuccessful. Because if you can get your success rate to 50%, meaning 50% of the positions you enter go positive and 50% go negative, you'll be a successful options trader if you have rules that reflect that ratio. Now, if you don't have rules, you could be a 90% successful options trader like I was for a long time. I blew a major account because I was too confident. I didn't have trading rules, and I traded 0 day to expiration stocks. Um, and these are all things that I hope to help someone else avoid, because it takes a long time to make money back. It's a lot easier to make money when you have it. All right, so back to Sophie. Um, I'm taking a look at my entry price, and I'm no longer 7% positive, right? So we're getting close. Where the fuck is Sophie? $20. I didn't mark it. Makes sense. So we're back to our initial entry price. Now, 1.08 is when I got in initially. And then I took a large position at 1.1. So I am 1%, less than 1% positive, but I'm still green on the trade. Now, I don't like averaging down on things, but I will average down one time total. So I'm very reluctant to use my. So this is one of the rules that I had to tell myself, because I'm such a confident trader that I always think I'm going to be right. And I will continue to buy positions as they dip in price because I think I'm going to be right. And I realized I can't really turn that off, the confidence part. So what I had to do was create a rule to alleviate that vice, which would be one buy, one average down. 4 entries, 1 average down. That's the rules. Them the rules. Oh, I got burnt really hard on when I first started trading. I got burnt. What stock was it? I think it was Coca-Cola. I was like, really didn't know what I was doing. I was trading options on a derivative stock, which is a low beta stock, because derivatives lock a stock in a range. They sell part of the stock and give the money to the shareholders, which the stock, instead of rising, that profit is why am I saying derivative? A dividend. So that profit is a dividend. So I was trading options on a dividend stock. I didn't really know what I was doing, and like it worked for a little bit because Coke had this crazy bounce, and then it didn't work. And I like trade. This was like when I first started trading, so it was a really small account. And then yeah, I also blew. I think I lost $700,000 on AMC. I don't think I know I lost 700,000 on AMC. I made just over 1.4 though. So this is beautiful action, and I will be using my average down if we dip, and if we don't, I will buy in again on this. I do like Sophie. I've been meaning to take a look at it for a while just because of how much attention it's been getting and because Chamath was part of it. I don't know if I'm saying his name right. I read a lot of things, but I don't enunciate them. Um, but yeah, so this is the next support line that I wanted to enter at. So we got our first contract at 1.08, and now as you'll see, we're testing the same thing, but the volatility hasn't changed, right? It's still 1.08, which means hey, it's not a terrible time to enter, but I would rather average up here than average down here. And the reasoning for that is because if I buy in at the same price I just bought in, right? And then it dips down, well, I'm going to bash myself. There it is. So that's the dip, and now this option price will go down. And remember, I still have 50% of the total buying power I dedicated to this trade to use. So this is why you save that. So as we're dipping here, this bottom half of the range becomes more and more appealing to both bears and shorts. Shorts are going to be closing their positions, and bulls to bulls and shorts. Bulls will be going long, shorts will be closing their position. Both of that results in buying. So the further we get into this range, two things happen. One, it becomes more and more likely that we break this resistance and we crash, right? And two, which is a little bit better, is more and more buyers come in and it will snap back even further. So again, we averaged at 1.07 and we averaged up at 1.1, and now it's trading at $1, right? So it's trading at the low of the day currently. And what we're going to confirm before we enter is I want to see massive volume coming in on this. This is an appropriate option. Anyone who trades options is, so yeah, this is actually it. So enter now. So yeah, so as it got real gamey there, that's what the indication I was looking for. So there's a couple things. One is, so this is an appropriate option, meaning options traders look for deltas of 0.3 when they're going long, because it's going to be the most lucrative risk-reward position. Now, 2 to 3 months out at a 0.3 delta is my bread and butter. That is what I will tell people all day long. If you want to trade options, as simple as I can make it for you is low. You're looking for a high volatility stock in a low volatility state, and at that point, when you identify that stock, you're going to enter a 2 to 3 month out option at a 0.3 delta. So let's find us a high volatility stock and show you what a low volatility state looks like. Where's my favorite? There she is. So this is a major high volatility stock. It's Tesla. And I've been trading Tesla for quite some time because it's probably the most fun stock to trade there is. It's just unbelievable. Well, besides AMC, before I lost all that money. So you'll see the Greeks, depending on which brokerage you're using, you'll see the Greeks in the options chain. So for Thinkorswim, I'm going to click all products under the trade tab, and that'll pull up the entire options chain. And I'm going to switch to showing me 14 strikes rather than all of them. Clean up the screen a little bit. And then what I'll see here is the deltas. So it's not even showing me, because the IV is so high on this one, it's not showing me a 0.3 delta. So this is the delta, which is the dollar change, the amount your premium will go up per the change in the underlying. So if Tesla was, I'm sorry, that's why that didn't make sense. Let me go back to Sophie so it makes more sense. So if Sophie, right, so look at these 0.3 deltas, right? What that means is as Sophie gains $1 in price, this option ticker will gain 33 cents. Does that make sense? Cool. So the reason you want a 0.3 delta is because that's going to be the best ratio of your premium to your reward. So I can buy more of these and get a solid return at 0.3 delta, because as it increases, right, so as the stock goes towards your call, the delta will increase. If you look at the entire option chain, if you buy a $10 call, your delta is going to be close to 1. It is 1. So it's 100% equivalent to owning shares, meaning every dollar change in Sophie will equate to $1 change in this option, right? So you could buy 100 shares of Sophie for $200, or you could buy this call for $2,000, or you could buy this call for $1,000, right? Now, you don't want to do that, right? Because that takes away all the advantage unless you're selling calls on top of it. So you could do this if you, let's say you want to sell calls, you only have $880, but you want to sell Sophie calls. You could buy next week's $10 call, which is the equivalent, because the delta is 1. It's pretty much the exact same as owning 100 shares. So as the stock rises, though, the deltas increase. So you're buying it when the delta's low, in a low IV state, hoping that the stock moves towards your call so that you can get the max amount of positions with a realistic return. So July 20, you might be asking, why wouldn't I just buy, the 0.1 delta, so like whatever it is. The reasoning for this is because they're so far out of the money that it doesn't really make sense to have them being traded, right? This is a trap, I feel like, for small account positions that they're just like desperate for a trade. They just buy something thinking it might go up, but like there's no way realistically you should be putting money into something as risky as a $35 call that expires in 2 weeks. It doesn't make sense, right? You could buy the $32 call for 5 cents more. You could buy the 28, right? And these are exponential gains on the stock to get there, right? And it's fraction of what the price is. It just doesn't add up. So you look for this 0.3 range. You identify one you like. So I found this one on July 9th at on July 16th we did. At 0.3 is what I found, which was the 22.5. Since we found it, it's gone down in price, but we're still trading in our range. And we're actually pushing back up. So this is good. This is good. What we would really like for the end of the day, because we just broke this squeeze to the downside, this is highly indicative of us testing this squeeze to the upside and then seeing a big move. Let me show you an example. So this little red indicator is TTM squeeze. All it's telling you is that the trends between the buying spots between the bulls and the bears are getting tighter and tighter. The bullish and bearish trading theses are going to collide, meaning only one side will come out unscathed. Cool. So it happens here, right? It happens here, happens here. Now, what's the big thing in these, and how do you know whether the longs are going to get squeezed, right? Like as it happened here, the longs were all squeezed. Boom, stock went down. Right? And as it happened here, right, the shorts were all squeezed. Stock went up. Well, you want to enter a squeeze from the top. So we squeezed. Now we entered it from the top. So that's a really misleading way to say that.
you want to enter a squeeze as the stock price is decreasing. So the squeeze here, right? Indicator, squeeze indicator, stock price increasing, squeeze indicator, bad, right? Stock price decreasing, squeeze indicator, good. Cool. Cletus, I think that that's exactly true. I think that derivatives. So what people don't understand when they talk about these margin calling hedge funds, and I see it all the time, and people want to believe what they want to believe. So I'm not gonna say anything about it, but I'm not gonna say anything on air about it, like to many people if I ever get the chance. But between this small group, I don't think that there's ever even a possibility of a margin call taking place like people anticipate. That would be something else, but I don't think that the government would let that happen. It would be, there's less apes than there are people who would be hurt from that, and more specifically people with power. But what I do think will happen is it'll be one of those things is like, oh, you've been doing all this shady stuff? Yeah, but it wasn't explicitly written down that it's illegal. We were just playing by the rules, right? And the SEC will then change the rules to readdress the synthetic shares. So people talk about synthetic shares, but it's not a synthetic share. It's creating a share. How do I create a share? I use an option. So if I buy a call and I sell a put at the same price, right? I just created a share. Does that make sense? So this is going to be my fourth entry, I think. So yeah, so that was my fourth entry, and we just bearish engulfed or bullish engulfed this little fucker down here. So what you're gonna see is shorts start closing their positions, and as the shorts start to close their positions, that will increase the stock price, giving confidence to bullish traders who just lost a bunch of money today. That will double the increase of the stock price. Should happen pretty quick. I thought it would happen here. They double down. I think it'll happen here. There's nothing saying they won't triple down, right? So I'm telling you what I'm seeing happening in this stock price and what I anticipate the two parties that are forcing this price action will do going forward. That's how I do my technical analysis. I try to see the forest. Now, that being said, there's a lot of factors in there that can go wrong, so I had to add a second layer, which is the confirmation. So the confirmation of breaking this will be the 1901, and that should pop us. I'm waiting for it. So this is the channel range that I drew earlier today, because it's a gap. Where's the gap, you might ask? Gotta turn the extended off, you'll see it. There's no gap there. It's the squeeze. It was a different stock that I had the gap, but it's very similar. Sorry, I was highlighting this squeeze. So breaks to the bottom, great. Starts to fly. Squeeze indicator, right? Squeeze indicator right here. Popped down, a little bit up. Squeeze indicator breaks way down. So what we're waiting for is another squeeze indicator, which might not even happen, but it should happen right here, and that should pop us right into the 20 to 20.2 range. On a stock like MRIN. Oh yeah, no, there's no. I don't trade that. I don't trade things where my hands are tied, and because I'm an options trader, if it doesn't have a derivative chain, I probably won't touch it. It takes away too many plays. So I like options specifically because of the amount of things you can do with them. Shit, the trade goes wrong on me, I'll just buy a fucking put. Like, oh, it's going really well, I'll sell some calls on top of the calls I bought. Oh, you know what I mean? There's so many different ways, like spreads, blah, 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 calendars. For a while, during the entire election season, I named myself the Kangaroo Slayer because I was just killing it. I was just buying calls and puts all day long, right? Trading the choppiness in the market based off the channel it was in. It was really simple. But those are different market conditions, and your trading strategies will have to revolve around them. But when you take away my entire trading strategy, I'm just not even going to touch it. So in a month when MRIN has options, maybe. Where's Lambo? Alright, so BlackBerry tested this range twice today, and that range, so this is what I mean by trying to identify as many theses as you can. So this was our previous bearish trend line, right? We broke through here, and then we came down, and now we tested it as a support. Strange, right? Well, that's kind of how it goes. So we tested it as a support until it was able to refine its bullish trend line. So now we have another confirmation that the bulls can trade on. So bears are trying to short it here, keeps testing and not going down. So there's this support line and this resistance line are two different trading theses. This trend line is an old bearish trading thesis. This is a current bullish, and this is the current bearish trading thesis. So as you look at all of these things, you can identify different reasonings and logics behind why someone would take a trade. So when you do that, what ends up happening is you start to anticipate the stock movement much better, because rather than seeing it as just an up and down thing, you see it as this motherfucker's stealing all those people's premiums. And it's kind of funny, right? Like, it's really funny to me. It's like, I am going to be a market maker one day because those people have so much power. It's crazy. So yeah, just see the forest the best you can, make predictions, and don't depend on other people solely. Every time you take a trade that someone else takes, if you don't know why they took it, you shouldn't take it. Okay? If you can't tell the setup that they took it on from just the trade, right? So if I see someone posts a trade, I can look at that trade and I can identify their thesis. Just because I have a very broad understanding. I've traded both sides for so long, I have a very broad understanding of why a bull would be a bull and why a bear would be a bear. If you can't do that, you shouldn't take someone's trade. You should find someone who will teach you why to take a trade, or you should ask them or figure out why they took that trade, right? But if you just blindly follow them, you're never going to learn. There was one person in particular who I did learn from. And I'll give him a shout out if I ever blow up. He was one of the traders at X Trades. I haven't used that in a long, long time just because their clout got too big. So their trades are no longer actual real trades. It's just them putting an alert out and 100,000 fucking people buying it, right? Like, that's how big X Trades is. So their alert quality actually went down because of the effect that their clout had. So I don't use them, but his name was Fun Trades, and he had some of the best trades and setups that I've ever seen, and I will hands down, if I can find his Twitter, recommend that to anyone. But yeah, it was Fun Trades, and he was with X Trades. Options Guru was another one in there who I liked. He was more of a scalping type player, and his TA was really messy, but his logic was so good. He broke down trades very well for people, and I really liked that he did that. Fun Trades didn't break his trades down for anyone, but his setups were incredible. and there's only been like 4 times where I've disagreed with any position that he's put out, and like I'm so confident that I'll always take my position. And 3 of the 4 times he was right. So yeah, credit given where credit's due. Fun Trades and Options Gurus from X Trades, they both had wonderful positions that helped me, not in the sense of following them, but I would pick apart their trade. And then I would pick apart their trades that went wrong. But the problem was when I joined X Trades, like however long ago, I think it was like almost 2 years ago, they had like no members. Now they have 300,000 members. So it's just so many people buying the same position makes it so that the position rises 20%. So I wouldn't be surprised if they're just buying like 100 calls and then putting the alert out and selling 90 of them. It's because as soon as they put an alert out, within a minute it rises 10 to 20%, because of the market makers take into account how many people are buying derivatives, and when 100,000 people buy the same call at the same time, the entire option chain will rise 10 or 20%, right? So I wouldn't be surprised if that's what I would be doing if I was in X Trades. Like, I would put out good quality picks, but I would also use the clout, right? Like, if I know for certain that every time I put a pick out, it's gonna rise 10%, you bet your fucking ass I'm buying 100 every time I put a pick out, and I'm selling 90 every time I put a pick out. Brett, I let them expire because I don't give a fuck if I sell my AMC shares. I'll buy them back. I'm also trading in my Roth, so there's no taxes. Or if you plan on holding AMC for over a year, this would affect your tax deficit. But if you're trading in like a Roth, which if you don't know about a Roth IRA, you should probably do some extensive research into it. And before you put a single dollar into your brokerage account, you should max your Roth. It does to an extent, Cletus, but because X Trades doesn't buy shares, what a hedge fund and a market maker and a whale does is they buy a derivative and then they follow it up with a massive short or massive long position, or they sell it. You know what I mean? They go into a position on a derivative and then they go into the stock. So if they're selling calls, right, they'll sell the calls in the morning and then they'll short the stock. So as they're selling the calls in the morning, that might have a little bit of bearish pressure, and it might, affect the stock price a little bit. But actually, I take that back. If they're selling calls in the morning, that'll have zero bearish pressure because it won't register that it's being sold to open. It'll only come through as a call being opened, right? So if I'm selling the calls in the morning, shit, I lost my track on that. Hold on, it's water. All right. So with the X Trades clout, they're buying the derivative chain, which is making the derivative chain increase. They don't have anyone buying shares to back up that move. With whales, market makers, hedge funds, they have both. So they're pushing the derivative chain first, and then they're using shares to leverage the stock with the backing of the derivatives. So if I buy or sell calls, right, and then short the shit out of the stock, that in a sense has the same effect as me buying puts, right? Because selling to open a call is bearish, but it's not going to have a huge effect on the stock. So they're bearish on the calls, right? But it won't open up as bearish. It'll just show massive open interest in a call. It won't tell you whether it's bought to open or sold to open. So that in a sense will increase the option price. So this is why they're so smart. So they sell to open the call, right? Increasing option price and putting upward pressure on the stock. So IV spikes, right? And then as soon as the IV spikes, they say, ha, I got you good, you fuckers, and they short the stock, right? And now every single day, these stock premiums are dropping close to 100% from open to close. Close to 50% from, close to 50% from open to close. So if I bought a call at open today on AMC, if I look at that same call at close, it's probably 50% of the price as it was at open. So that's the power of being able to inverse the derivative chain too. So back to what I was saying, calls will affect the stock price by making it go up, but it needs to be backed by a move. It's just like, hey, someone thinks this will go up, but no one else really backed up his thought process, right? Whereas, or someone thinks it might hit there, but or the put, they might think it'll go down. So if I'm really smart and I sell to open calls, that's a bearish position that registers as bullish, right? So when people are reading, and I could be very wrong on this, but my understanding is that there's zero way to tell whether through the flow whether an option is bought to open or sold to open. So a call is not a bullish position. It's an option. It can be bullish and it can be bearish, right? So calls will have overall a positive effect on the stock price, but not too much unless it's backed with something. So because it can be both. So it's kind of like a sneak attack. So damn, I crushed it. 56.86 was the line. Can we hit 50 again or no? Like, this is not gonna happen. Like, what the fuck? So this is shorts right here. This is not bulls buying. This is shorts selling to close or buying to close their positions. So it's buy pressure because you have to buy a short position. So same thing with options though. It's inversed, right? Like, you can take a short position on a long call, and that inverses it. So I can manipulate the stock to have a tendency to want to go higher, which will increase the implied volatility and in turn increase the premium cost, and then short the stock with more money than with massive amounts of money that I just made from selling premiums as I let the stock rise, right? The option price go up. Then I short the stock and I either let those options expire worthless or I buy to close them at the end of the day. But it's pretty much been like a routine pattern on different time frames of you just have to determine whether the IV is high or low, and then the market makers will trade around that on throughout the week, and then on Thursday they will decide for Friday whether they want it to expire bullish or bearish based on whether they can make more money from put premium or call premium. And then Monday they'll let the stock run again, sell calls, right? Comes bullish, IV rises, sell even more calls, short the stock. It's a beautiful thing, honestly. It's really smart. And like, I don't know, I don't really hate on them that much. Like, yeah, like Citadel is shitty. Like buying someone's order flow and then using that to short sell every stock that retail wants to get into is a shitty, unethical thing to do. But being a whale who understands how to use human emotion to manipulate a stock price to make 10 to 20% a day on premiums alone is absolutely very smart. And I don't think that's unethical. I think that's simply inexperienced traders getting got. Very different from the Citadel interaction. Yeah, Brett, that's what I've been trying to tell you, dude. I've been selling 30 contracts at 5 to 10% a week on my AMC calls. So this past month when AMC's been trading consolidating, I've made over 40% on my AMC position, which is up over. I bought it at 8 or 9 something, and it's at, yeah, it's pretty good. But yeah, so there's many different things like that, Brett, and then you have to think about how you can squeeze the most amount of money out of something while staying risk neutral, or limiting your risks, because there's always going to be risks with options trading, and then figuring out what to do when you have a trade go successful and when you have a trade go bad. That's number one. It's like set some rules and follow them. Eventually, in a year, if you've made a lot of money, you can change your rules. But until you statistically make money and put it into profitable things like property or whatever, just inch by inch. Hey, let's go. It's gonna fly. Do it. Break this support. So, our Sophie call. What are we at? We are at the 716.22.5. We had a few entries. And they're all in this zone down here, which we charted out. And we could have gotten a better entry, but we actually got in lower a little bit earlier. So the fact that the derivative chain isn't accounting for this move down is kind of strange. There must be massive calls being bought. Otherwise, I don't understand why the option pricing would be what it is. Are you in MRIN? So, sometimes I laugh at myself. I lost $4,000 trading space, and like, I could have just bought 100 shares of space, but like, I lost the cost of 100 shares of space trading out of the money space calls. Like, yeah. So, I should preface that with saying that I took a very large position on space, so that's not a small. That's a very small loss in percentages. But it's just kind of ironic. It's like it doesn't make. Sometimes I don't make sense to myself. We did not get the move we wanted. It actually created a very strong resistance here. So all of this will be tough to break through, but we have some strong support. Yeah. And then when you go to a bigger chart, like a 4-hour, it'll show you realistically what supports and resistance you should be trading off of. So essentially everything I just drew, I'm probably going to delete. So I delete all of these just because I want more defined supports and resistances, which you'll find over time. And a 6-minute chart doesn't show you time.
Oh, remember I put that alert on AUUD for my entry zone? Watch how this plays out. So essentially just a very easy entry zone. I saw a correction. It's so early in the lifespan of this stock that you don't even need to worry about the past. It's just simple Elliott wave correction. A down, B up, C down. So I charted my entry zone at this, which would be here. And guess what? It also coincided with a very strong Fibonacci extension. So this stock will be very good. It's about here, I think. But because it's an IPO and it doesn't have an options chain, I just won't even touch it. I just like charting things, especially new things, to see if I'm correct. So from here, my anticipation will be that it goes to a new high of 10.5 tomorrow, because that'll bring us to our next extension and retracement. So I will write this in here. What we got on document, price prediction. So yeah, that's my entry. So you'll see A, B, C, 1, 2, 3, 4, 5, right? And then A, B, C. So it'll probably actually be a little bit lower, because we're still in a bullish trend. So you're looking for, it's too small to even do Elliott wave that detailed. I don't know why I'm doing that. I shouldn't confuse you guys. So you're looking for your A down, right? B up, C, and then 1, 2, 3. We missed this. We need a different time frame. But yeah, so we're not gonna worry about that. So and then one more push down is what I'm saying. But that'll be followed by a large push up, which we're already starting to see. So entered my alert, right? I got a little note on my thing, gave me a little ding, said, hey, come check this stock out. I check it out, and this is the confirmation bias that you look for. So you plan out what you think is going to happen, and it starts to happen. So now if this was a derivative-based stock, I would be entering long here in anticipation for a momentum shift up. Now, that doesn't mean that this will last. We might hit this support and sell right off, right? Or even this resistance and sell off. But it's a pretty good way if you confirm the price all the way down to here, right? This is the range. I extended it over. This is where I want to buy. Hits that range. It means you're on the right track. Now, when it starts to bounce off, it means you're really on the right track. So what you do is you wait for it to hit the range. You confirm for it to break it. And then you wait for it to test it again. Because if it tested it once, it'll probably test it again. So in the next, let's go to a 6 minutes so you can see. In the next couple minutes, we'll test right back down to here. And that's when you would go long. And then after hour trading should bring us to 10. Which is a nice, clean 40% gain on the stock. Nah, it won't happen. That's way too much. It's not going to be enough volume. Look at this volume, and then it just died. So it'll bring us to 8 in after hours, I would say. And like this is essentially, I go through this and I correct myself, and as it plays out, I make little predictions, and if I'm wrong, I readjust it. But then my whole trade will revolve around this entire thesis, right? And the thesis had some confirmation bias through many things. It'll be through the option chain, through my indicators, through the Elliott wave, and you could have your own setup. There's no right or wrong technical analysis. It's all just an argument, right? So it's whatever works best. So a lot of times people will also show you chart patterns on like a 5-minute chart. They don't really mean anything. So let me show you Space's option chain today. And I specifically want to show you the call to put volume and why I don't think that's a good thing. So out of the money, out of the money has a delta of below 0.6. So anything, so there's at least 150,000 calls right now sitting out of the money. At the money is 0.6 to 0.8, 20,000. In the money is 0.6 to 1, 50,000, right? Oh, 90,000 at the money, 50,000. So when you look at it from that perspective, right? Why is this here? I feel like it's blocking information, but I don't know that it is. So when you look at this information, you could also look at the volume weighted average, the VWAP, and the implied volatility. Now, what I want to show you is we're going to go to this week's series. It's saying that there's 100% probability right now that this stock will trade above 35, right, by Friday. So when I look at the put probability, they're saying that it's almost 100% probability that the stock will be below $60 on Friday. So does that kind of give you a range of what the market makers expect the stock to move? Yes. Now, when you have this range, you can then determine that they're going to want to keep it on one side or the other based on where they would make the most money. So if they know that they'll make more money by keeping the stock closer to 50 than they will to 60, right? Then they'll keep the stock closer to 50. So you make your trade plan around that. So for Space, I can't really get back into it because I think Friday will be your buying entry for Space. This was not the day that I wanted for us here, unless PM brings us back into the 50s range, which is the 6% swing on the stock, right? We're probably not going to test high 50s again before Friday. Now, if we break back to the 50s range in after hours, we'll absolutely test high 50s before Friday. So that's kind of what I'm looking for now is like, hey, most of my position's gone, right? I've made some money, and then today I ended up losing $4,000 on Space, which is kind of funny to me. So I wait, see how this plays out, and then in PM, it'll kind of give me a gauge of what I want to do on Space tomorrow. So Space tomorrow, if we hit the 50 mark in the PM, I'm going to sell calls on top of my long position. Sell to open calls, right? This is because I want to keep my long position, but I don't want to deal with the bullshit sell-off that happens in the first 20-30 minutes of the trading day. So to avoid that, I open a short position, which is covered by the long one, and that negates the negative sell pressure. So, and then that's if we go above 50 in after hours. Now, if we don't break 50 in after hours, which is it's very far away, we probably won't. Tomorrow morning, I will sell all of my position to close, right? So I have a long position. If we break 50 in after hours, I'll sell to open a long position on top of it. If we don't break 50 in after hours, I'll sell to close my entire long position for a loss, right? So that's how I conceptualize my plan for tomorrow on Space for the tiny little position I have left. If we break 50, you buy the calls at the open, or sell calls at the open, and then when we gap down to profit take, you buy to close them. So immediately sell them at open. So let's look at this. So this is Sophie's option price for the day. Immediately sell a call at open, and then you can buy it back 12 minutes later for 15% less, right? A 15% gain. And 2 hours later, you can buy it back for a 53% gain. So that's just trading around what the market makers are doing. So, and then that's if we gap up though. So if we don't gap up, it will not recover. So if we don't gap up, you just immediately want to sell to close whatever you bought to open. So this is an example of a day that gaps down, right? So if we gap down tomorrow or stay flat, it'll trade like this. From the morning, it'll open, and then it'll just get crushed, and you'll be sat there holding, because the market makers trade them in a way that it kind of gives you hope. Like, oh, it might come back, and then it doesn't come back. Oh, it might come back. And this one did come back, so it's a bad example, but you get my point. Like, you don't want to be bag holding through this 2-hour period of bullshit, right? Much better, you gap down, sell your call at open immediately, and then wait for a new entry with the 50% loss you took, rather than holding a 75% loss and then dealing with the emotional wear and tear that taking negative positions has. Your plug position, Brett, was different than mine. Which one did you pick up? You see how AUD played out? It touched that box. We just got an alert that it touched my entry zone. And then I just want to show you what happened. So we touched the entry zone, and then within 12 minutes it went up to I don't know how to tell how many percent. It went up. It went up. Man, copyright free music is so bad. Wish. Hey, take it easy, please. I'll see you tomorrow, hopefully. Wish I haven't looked at. I like Wish. I don't like this at all. This is not good. What the fuck happened? But I will say that this last support that we just touched brought us from 13 to 15 in a single trading day. And we just touched it real quick. So 13, we touched it, we held it. If we hold here, we'll probably see upside to at least 14 tomorrow. So depending on when your wish position expires would be the answer to that. But again, you need to see your position as more than a locked in type thing. If it starts going against you, there's many things you can do to avoid some loss, like to mitigate some of the loss. So have a plan for tomorrow if you have any open trades on what you'll do in the worst case and in the best case. And then to answer you specifically, I sold all of my plug position and I never re-entered after that one failed entry. So I have a small entry that I entered here. I didn't ever re-enter because it didn't hold, right? This is the gap that we filled. It didn't hold or bounce back anything, and it rejected this, so I've been kind of sitting chilling. But what I'll say is that the stock is higher than it was yesterday, so buying a call right now is not a bad idea. It's just IV's still high because the stock went up and down and didn't break any supports. So I mean, that's pretty much where we got in yesterday. Or, no, we got in at 2.25. We crushed it. That was 2 days ago. Yeah, I wouldn't trade this. I wouldn't add to this. If you want to add to a position, add to the next following week. Just go up a couple dollars. Maybe a 4-hour chart will show me something I'm not seeing. Oh, nice. All those Sophie calls are in the money. Or, I mean, green. Yeah, so, not my best trading day. It was really a bearish day overall, and I didn't take any bearish positions, which was a mistake. I didn't anticipate it. I couldn't find where the money was going. It was a little surprising to me. Usually, when most of the stocks I trade aren't doing well, it's the result of another stock just crushing it. So I'm not actually certain on what the fuck happened today and on why all of the meme stocks kind of tanked. But that's a lot of losses for a lot of people, and I'm very glad that. Very glad we got a couple good positions today. So, there's some reason that doesn't really make sense to me. But let me see if I can illustrate it with a. So this doesn't make sense to me. Why is the option pricing increasing as the stock price is decreasing? So the implied volatility shouldn't have gone up, right? At this point, the implied volatility started to rise, right, as the stock was dipping. And that didn't really make sense to me. But it happened, I guess, so quick. Maybe there just wasn't enough volume. But what it's making me think is that so many people were buying calls on Wish that the market makers, because there were so many calls being bought, raised the entire option chain's price. Otherwise, I don't know how to. Why would this option chain be priced so weird? This isn't the option, sorry. Let me show you the option that I'm even talking about. So why would this be priced so weird, right? Like, we tank, right? It's not priced weird at all. I was looking at option chains. I apologize, guys. It's priced normal. Can confirm. Yeah, not a great day for me, Brett. I didn't make any money. It's a rare one. I didn't lose money, but I made like $50. So what do you think Space is doing after hours? Anything good? So this is shorts closing their position, this laddering here. And it could lead to a bullish reversal, but I honestly don't see it. I think that was a dud. But we held a really nice support.
And this supports essentially where we blasted from 46 to 56 on Friday. So there's a solid chance that we see a recovery to 53. I would say a very good chance we see 53 tomorrow, and a small chance that we test into the 52 to 57 range. So trading off that thesis tomorrow, which will change if we break over the 50 mark, my plan will be to sell to close at open if we don't break over 50, right? And then if we do break over 50 or it's close to 50 in after hours, I'll wait until we test 52, this range right here. And then as we test that, I'll sell the call. Yeah, that's what I'm kind of seeing too, Brett. And I think you're kind of picking up on the reasoning, right? It's that big money is making a lot of money on shorting this stock through call premium, right? So they also have the backing of the market makers who want the stock to expire on the put side. Or I mean on the call side. No, on the put side. Will something just run for me that I'm in? I'm really not liking this day. I'm so done with this song.
All right, gents. I'm gonna hop off the stream here and jump into some hopefully uh, informational content. I was thinking about just doing a brief introduction into what options are. So if you guys, I think there's maybe still one or two of you in here who aren't AFK. If you have any suggestions on what you would like my first video to be, I would love to hear them. Just shoot me a message. It only gets worse, Brett. And Tia naked. I haven't really traded naked because it's a penny, but we could do that. So the reasons that I don't trade pennies is because, is because they're so volatile. What the fuck happened to the stock? Okay. Sorry, I thought that said 300 or something. I was very confused. Okay. So, well, what we're seeing here is the end of a major Elliott wave. So, like, this is over. But that doesn't mean that that's the... So this is 1, 2, 3, 4, 5, right? Like, that's it. That's the whole wave. Now, A, B, C, right? C would bring us down to here. 2, and then you should see another little correction, but this correction should be opposite of what you normally see. So it should be an up, not a down, up, down. It should be an up, down, up, right? So we see our... So we get to the bottom of this channel, and now we'll see an up, down, and then an up. And now it could correct another time, which it seems to have done, another ABC, but that should prep us into a push up if the stock is going to continue. So let's say this is 1, this would be 2, 3 has potential to be here, but a different Elliott wave theory could put this at 5, this at 2, right? This at 1, so bearish theory now, right? Like, this is the whole superset. And then after that, it would be 1 down. So 1, 2, 3, 4, 5. So those are the 2 paths, but because it's held this... Oh, it did. didn't hold that. That's tough. Yeah, pennies are hard, man. I don't trade them specifically because there's too much ability for someone to move them, and they don't behave like a stock with a real market cap. So what I would say though is there are probably better risk reward positions out there than naked right now. The other side of this trade, right, is that that's not 0.6, that's 0.06, right? That's the other side of this trade. So this could be a 1 though. So let's say this finishes our correction 2. This could be a start of a wave. There's so many, it's just such a weird stock. There's so many different theories it could be that honestly I'm not even comfortable giving you a prediction. I apologize. Like this could be a grand superset of a 1, which would entail that this is then it's finished an entire cycle and it should start a bullish cycle. I don't think that's the case because we held so high here. We didn't break into wave 2's territory at all. So wave 1 was up, 2's down. We didn't break into 1 or 2, so this can't cross into 1 or 2 or it's invalid, right? So we did break pretty far into 3, which is here, but we didn't go lower than 4. So this is the invalidation level. So 4 is if we put here, that would invalidate it, automatically make me bearish. We didn't break that. So here's what I'll say. It looks to me to be a finishing of a superset, not a grand superset, number 1. So that being said, that would put this as 2. So 2 would consist of 3 waves total. The first will be down ABC, so let's label it 2. So down would be A, B, C. E, B, C. Okay, so that's the first one. And then the next one is going to be bullish correction. No, it doesn't even work. None of this works. Maybe a day chart? Who knows? What? What happened? Oh, it's in a week chart. It just didn't even show it. I was a little confused. Okay, so we're in a day chart now. And there's actually more data here to use than I actually ever saw. So, holy shit, what happened to this company? Is this the Naked Juice brand? The ones that make like the mango one? Mango Madness. Yeah, so with even more data, this is not looking good. I'll tell you that. But we definitely bottomed out at 0.6 cents a penny. We're up, a few 1,000% from there. So I would say that there's upside to, I would not hold this anything over this range is where my profit take would be. It would be immediate too. It would be right at the $1 mark because I think it'll do this. See how it hit $1 and it rejected? I think it'll do that one more time before we go down. And then if we break the dollar, you can add to your position until we get into the 1.5 to 6 range. But you can do a pretty easy retracement play from here, which would just be you just go to the high to the low, right? Now, this will give you a relatively good. This is a weak chart too, so this is a lot of data. So this will give you a relatively solid range of resistances and supports. We're going to adjust it a little bit though, just because I don't want the 0.06 in there. This is the problem with pennies, is that it becomes 1000% gains when they're a penny, right? So I don't really want it as a penny. Cool. So yeah, I would just sell in this range. Real talk, it could definitely see upside, but there's probably too many bag holders from here to here with this little volume to ever get through there, considering that bears will be shorting. So you got your bag holders trying to sell, and then you got your bears shorting, and you got decreased volume. So I don't like it, is what I would say. But I don't trade pennies, so I'm not the guy to ask. Jesus. Everything's busting supports. Hey, Sophie popped up a little bit after hours. Dude, MRIN went up 123% again? What? It'll be down like 40% tomorrow. Hey, take it easy, Luke. He thinks it's the closing brand. Bro, you should know these things. Where's Lambo? It's a one-time special dividend. The shorts have to close their position. Fucking assholes. Oh my gosh.
Lambo? Lambo? So I think it's really funny to post in stock twits. I always say, "Where's Lambo?" under the meta materials one, just because those idiots in their DD lost me a bunch of money. This is why I don't trust other people's due diligence. But yeah, so I like to post "Where Lambo" in there, and this guy responded. He said, "Your buddy George is driving it. George is the CEO." I think if you wait, I think if you refresh your stream, Brett, it should catch you back up.
Yeah, I got your message at 4:31 Eastern time. Uh,
So once you click save, this is what I'm talking about. This is where you fix the delay. You're gonna come over here, you're gonna scroll down, and now right here, your stream latency. By default, it always goes to normal latency, which is usually about a 20 to 40-second delay. But by doing that, you're gonna have a better quality stream. All right. What you're gonna want to do is click ultra low. Once you click ultra low, okay, you're gonna want to go to Streamlabs OBS. You're gonna want to click go live. And then right here, you're going to see this stream right here is the one that we just made. You're going to want to click this, and then you're going to want to click confirm and go live. Okay? I obviously don't want to go live right now, so I'm not going to do that. Then in the future, when you're on YouTube, it's going to be very easy for you to do this again. Because when you're on that other screen, you're going to have all those three streams made. You can click it, and then always check before you go live on OBS, Streamlabs OBS, before you click go live, always check to make sure you're
okay, so I figured it out. I can't fix it without ending the stream. Well, it's actually probably a pretty good segue. So I think I'm going to head to the gym now. I'm going to kind of construct in my mind how I'm going to go about all the video content, and then I'll try to put it together. So the issue is I don't know how to edit anything, and I don't really care to learn. So it probably won't be the most concise video, but it'll have all the information I want to have in it. Yeah, I've just been kind of one-taking everything, and I can definitely tell. I like catch myself mid-thought. I'm like, what was I even thinking about? It's just so upsetting to me. They know, like, Unusual Whales knows enough about option flow to know that you can't tell whether something is sold to open or bought to open, and he intentionally leaves that information out. And he tries to get around it by saying things like ask side is the best side, so rather than the bid he wants things going for the ask, right? And that's kind of in a sense avoiding people who are selling to open. But it's still incredibly misleading. But no, their stuff is wonderful. It's just like a technical analysis, though. So if oh, Brett, that would be absolutely the coolest thing in the world, man. I have nothing. I went to the store. I bought a microphone and a webcam, and that was the day. It's like, hey, this is what I know. Everything's so fucked today. Sophie's is doing okay in the after-hour session. I can't really see anything, but I kind of want to keep that box. Okay, so we had massive volume come in at the end of the day, but that's very possibly short sellers buying to close their position. But generally speaking, you don't see this much selling followed by volume spikes like this.
traders don't like to go long before. I'm sorry. Investors don't like to go long before it starts to consolidate because they don't want to catch a falling knife. Unlike an options trader who wants IV to be low, so you do want to catch the falling knife. So they like to wait till you're not in a 2% down day, right? Where you're more in a flat day, or coming back up and testing into the 19 range. So it's unusual to say the least. And with this squeeze indicators continuously firing on the was it a 4-hour chart I saw it? Yeah. So because the squeeze indicator is firing on this 4-hour chart, what I actually anticipate happening is that we see another squeeze happen right here, and this one, because we're coming from the downsides, will pop us right into this trading range. So that's where my price target is, and that's kind of how I see this stock playing out. So it'll bounce up and then consolidate here a little bit, and this is why I gave myself two whole weeks. So this is the end of the line for me. I have to be to 23. It was 23.25 is my break even, and I have to be there by this day. So that's the trajectory of the option I took, and if it starts to stray too far from that, this is why option pricing is very dangerous. So if the stock doesn't continue in this manner, right, it can cyclically trade along this, but it has to go in this manner, right? Otherwise, every day this would slowly just go to worthless, and I would need more and more single day gains to ever make money on this position. So always have an idea of where you need to be when you're going to expire. That way you don't take super unrealistic trades thinking that they're realistic, and you also know, hey, if I'm not here by Friday, right, if I'm not sitting at 20 to 21 by Friday, it's very hard for me to conceptualize wanting to go to 23 by the following Friday, right? Now, if I'm sitting at 20 to 21, it makes it much easier for me to see this going. So that's how I would trade 2 week out. And then for something like BlackBerry, I think I drew my break even on that. Yeah, this is our BlackBerry break even, and that's the timeline. So this is the range that I need BlackBerry to hit for my swing trade here. And it gave myself 2.5 months. So that's the trajectory. And what you'll see is either we stay in, so over the next few days, if we continue to stay in this, it's okay to have up and down days. If we stay in this little channel, I'll feel really good, and this price will continuously get higher. Now, what I would really like is a breaking of the upside of this channel, which I anticipate happening. Unless something crazy happened, I just don't understand why every meme stock was down. That's crazy. So what I anticipate happening is a breaking of this channel, though, a retesting of the 13, and then we should be able to fly right to the 15s. So that's my trade. We're seeing some major resistance right here, if this makes sense. So here and here are going to be our support and resistance range. So this is danger zone, right? We hit this, and it rejected. So I kind of drew that rejection down, and obviously my drawing was done on like a 6-minute chart, so I don't think the stock's going to go to 19 in that day. No, it's just what I expect the stock to do over the future. So I expected it to come up. It didn't come up. It just went straight down to my buying zone, so I went long here. And now I'm watching really closely to see how we go. So as Friday comes about, which will be here, I want to see BlackBerry trading in this range, right? That would make me feel good. Now, if BlackBerry's not trading in the 13 range by then I probably will exit this trade before close on Friday, and then re-enter it at close. Why? Because if it's not trading in this range, right, you can already anticipate that it's going to be a down day on Friday. Just almost always is. So if it's not trading in this range, it's probably better to sell it at open, and if I like the position, rebuy it at close. The risk would be, hey, it doesn't go down on that Friday. But the reward is, hey, if it does go down, or if it does go down further than you expected, you have your money
that you can then use to re-enter. Yeah, have a plan. So know where your stock needs to be by a date. So he's anticipating that we have a breakout on the NASDAQ. And he's anticipating that it rises 2 times what it is, which is nuts to say the least. And normally I wouldn't pay it any mind, but he's got 30,000 followers. And apparently, I've looked at a few of his other posts, and they've been pretty on. So I would like to see the thesis behind his logic here. This is the status I was looking at. So obviously he's not going to answer me if I like messaged him or something. So I have to look at the NASDAQ in a monthly. So I'm going to go to the NDX. And then I'm going to go to a month chart, which is max month. And this is the chart that he has right here, right? Which he's saying just took place today. So This is his little trend thesis, right? Um, it's nice that he's also trading on Thinkorswim, and then he's saying that this confirmed break right here isn't a bull trap, right? So what is going on? Let me draw a line. Okay, there you go. So he's saying that this isn't a bull trap and that this is actually a breakout signals. And he's saying it's the exact same setup that brought the NASDAQ from 2,500 to 4,800 and 2,000, which is something to say the least. So what I'm gonna do is okay. I'll be right back. I mean, I could basically write the source code for it. I just don't know how to code anything. I could write the formal logic for it. It would be a simple conditional. If a stock gaps up, if a high volatility stock gaps up, and then it would be a contingent with, so it'd be like if gap up and followed by one green bar and one red bar, then track distance of red bar, anticipate expected move to 50 to 78 range. So create automatic box there. And then the second conditional would be if it hits the 60 to 50 to 78% range and comes down, you would anticipate the buy zone, which would be 1 times the length of the dip. So that would be the formal logic. I just don't know how to put that into. I don't know how to code anything. I've never coded. I just know I understand that code is logic based. Hey, we're making moves in space. Oh, I'm in the month chart. That won't show me anything. Yeah, absolutely. So I'll have to think out how I want to format the first part of it, because
essentially you could look at like a 1 minute chart, right? And this is the let's see something that gapped up today. So what did we have gapping up? Nothing on that list. Jeez. Snapchat. Hey. So essentially, if gap up, then that's just a pure bull run. That doesn't help us. Huh. So like this is the move, right? So this is the A, B, C correction. So A, B, C. Nah, it's barely not even there. So let me find one. Because this is what I mean where it gets tricky. Because you have to find the right. Because you have to tell your code to look at either like a 2 or a 3 or a 6, whatever minute chart you want. But we're looking for an A down, right? So if gaps up on a 1 minute chart, look for A down, B up, C down, which it's not showing up on a 3 minute there. Oh, it's because we didn't gap up. That makes more sense. Here, we got one. All right, so A down, B up, C down. All right, that's the, so A, B, C, right? So if gap up, then mark top of first bar, right? So you need to somehow create a mark here that indicates A. Then track bottom of this bullish movement, which would be B. So as soon as that shifts to there, and then so it would be if A and B, then anticipate expected Fibonacci retracement to 50 to, so it'd be like this to there would be your anticipation. So anticipate Fibonacci to this range and expect a gap down. So when we look at a 3 minute or something with that, great, we got one. So A up right here. So if gap up, track first high of day. Yeah, I'm not sure how you would communicate to it to mark. So we need a mark here for A, and then measure the distance from this to here, right? Which day is this? Which date? This is 6:25. Cool, we can go to a 3 minute then. So, A, B, C, right? So, I didn't draw this Elliott wave, but I can tell you it is one. So, you do high to low. So, if gap up, track bullish momentum till first bearish switch, then measure distance from momentum shift from A to, so measure the bullet or bearish distance and then anticipate an expected move at the 50 to 60. So measure distance. If it gaps up, measure the distance of the first move down. Mark expected shift for bear trap. Anticipate expected shift for entry. If all of these happen, then send in an entry alert. Essentially would be the code. So that's very sloppy, and I have to figure out how to phrase that. So see, the thing is, I don't know how Thinkorswim works, so that's where I'm going to get lost. But you need to tell the code to pick up
when the first bullish. Oh, you do high to low. Okay, got it. So if stock gaps up, track first lower low. So boom, right? Measure high of that bar, so first lower low, which was here. Measure high of this bar to the low of the next. So how do we tell it to measure the low? So we want to measure the high of the first lower low bar to the low of this next higher high bar, right? So that's the measurement we want to measure. How do we tell a code to do that? And then the conditional would switch. So if that, then A to B. If A to B, then draw anticipated shift. If anticipated shift lead draw anticipated shift and anticipated entry zone. If anticipated shift leads to anticipated entry zone, send out entry alert. Maybe? Because, like, I mean, look at this, dude. It's like, it's that easy. It's a range, obviously, so it's going to be ups and downs. So you started at this 78, because that's the max, and then you leave it here, and that's essentially going to give you a pretty good indication. So I want to measure this, anticipate this, and then a conditional if it hits this room, or this move. Measure A, draw a Fibonacci retracement from A to B, draw a rectangle from the 50 retracement to the 78 retracement, measure distance from A to B, put buyer zone length of A to B from B to C. So many different ways, man. What's Polygon? Oh, open source. Word. I'll DM you, Brett. I gotta run for a little bit. I will be back. I'm gonna think about how to format that logic a little more because I never actually thought about that. But that would. So obviously, there's gonna be a lot of people who just want indicators or alerts, and that'd be okay. I don't ever want to sell anything, but if there are people who want something like that, I would totally be down with that. Just open source it and see how it goes. Why do we keep opening so high on Corsair and then just getting obliterated? Like, why does this happen every after-hour session? Boom. There's no volume, maybe?
Oh shit! Still got viewers. What's that?